Threads is up. Okay. Old dog. Old dog is in the building. I don't know if that is that good or bad. Old dog's here. Jonathan. Glad I held the added my puts and calls. Okay, Jonathan, I'm not 100% sure what you mean by that, but all right. Kelly, New York, North Carolina. Good. Thanks for going live on a Saturday. You know what? You get to a certain point in life, and Saturday's just another day. You know? Apple. Let's jump in, take a look at Apple real quick. Now, I got rid of all my Apple. Okay, now, why did I get rid of all my Apple? Well, it was only giving me 4% per week. Just not high enough for me. Okay, so you say 4% per week. Why would you get rid of it? Here's the thing. I have a bunch of different trading strategies, and I had Apple in a group that had a different trading strategy, and the trading strategy at 4% was not high enough. Anyway, Doc, how's it going? All righty. Apple, yeah, AAPL. Apple first on the list. Look at this, 124 people at the bat. Let's rock and roll. See how we can make money. What we're doing here specifically, we're trying to create a safe, secure, predictable, consistent 1% per week. Now we have audience over here on Facebook, Instagram, YouTube, and TikTok. Now, I got a couple more phones on order, so I have a couple more cameras coming in. It's going to look really weird. I'm like 6 or 8 cameras going on all the different channels because I believe in sharing the wealth. It's information. Now, 5 criteria I hadn't met. This trading strategy was created for my 9-year-old daughter. She was 9 years old, and she wanted to see what Daddy was doing. So she wanted, you know, this is what dads do. Dads encourage their children to do what they're doing. So I encouraged my daughter, who was 9. This was back in 2008. She wanted to do, yeah, we're looking at Apple. It's right here. Hold on a second. Threw me off base there. So she wanted to see what I was doing, and she wanted to do the same thing. So here's the challenge. 9 years old. Okay, let me bring up a quick video so you can actually see who I'm talking about. Oh, wait a second. Let's go back there. Nope, wrong one. All right, hold on. We'll get there. Hold on. Hey, Mikey's here. We can get the party started now. Mike showed up. How's it going there, Mikey? Hey, Mike, how did you do this week? Just curious. Videos. Here we go. We're going to show the little princess, the oldest one. Hey, Joe's here. Joe's here, and Swiss Piper. Swiss Piper's here too. Hey, how you guys doing? All right, so here's the princess right here. Why am I have no volume on?
Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money. Trading days, and if you only have... You can buy a different stock the whole year. It's still be profitable. It's easy. One trade a month. Who can't do it?
Mike's out here to pick on me. What do you think? I asked me 20 years ago, 10 years ago.
You don't act any different at all?
Did you hear that? 11 years ago. See the date? Where's the date? Right there. 11 years ago. Okay. Same thing. 11 years in a row. All right, so let's go back to where I was. Okay, so this was created for the 9-year-old back then. He's way better looking now. Thanks, Doc. I have a lot of options to sell on Monday. So do I. Okay, there are 23 individuals. Yes, there are. We're up to 23 imposters now. Woohoo! I got to be doing something, or I got 23 people in, what do you call it? Pretending to be me. So here's my suggestion. This is just a suggestion. You guys take it for what you want. There are 23 other people pretending to be me. So when I say, if you're really, really interested in this kind of stuff, DM me with your phone number. I will personally call you. Guarantee you those 22 other guys ain't going to call you. You DM me, I will give you a call. Okay? Ask people here in the chat if I actually call. And the ones that I have called will tell you. Yes, he does call. Calls at the weirdest hours. I just go with the flow. Anyway, so this strategy was created for a 9-year-old. Now, it had to be simple. It had to be safe. Okay, the income had to be predictable, consistent, and there's no way she can lose. All right, so how am I going to do that? Well, there was 5 rules. 5 rules are very important. Rule number 1, never buy something you do not want to hold for the long term because you just might have to. The longest I've ever held anything. Now, I've been doing this for quite a while. I just showed you a video of me doing this 11 years ago. Now, I've been doing it a lot longer than that, but that's when I first started sharing the videos. Okay, I first started sharing 11 years ago. Now, as I was saying, never buy something you do not want to hold for a long period of time. Longest I've ever held anything was 9 months. And that was, hold on, Kimberly Clark. Paid awesome premiums, really did. Okay, now, second, never sell at a loss. Third, make sure it has 20 years or more of increased dividends consistently year after year. Why? Well, in case the stock does go down, you will at least be getting higher and higher dividends every single year. Okay, cash flow. I'm at that point in my life where cash flow is very important to me. Fourth, it has to have weekly options. Why? Well, because I want weekly cash flow. I do. My bills come due every 30 days, and they don't come due all at the same time. Now, you know how it is. If you're old enough, you know the bills come due every week. Why invest in dividend stocks that pay less annually than, say, a high yield? Okay, Adam, you're new here because you didn't let me finish, okay? Now, last one, the numbers all have to work. Why? Well, because we're looking for a safe, secure, predictable, consistent 1% per week. Now, Adam, if you know of a savings account that pays more than 50% per year, there's 181 people here in the audience on this account here. Okay, we got this one, and this one, and the one down here. So I'm broadcasting them at 5 stations. If you know a high yield savings account that pays over 50%, we're all waiting to hear it. Okay, so your question, why invest in dividend stock that pay less annually than, say, a high yield savings account? Okay, name me one savings account that pays more than 50% per year. Waiting to hear it. Let's get back to Apple. First off, okay, this is for entertainment only because I am entertaining. Whatever. Anyway, don't take whatever I say seriously. Do your own research. Okay, we're all adults here. If you see something that looks interesting, yes, honey, I play an adult. I try. She likes to pick on me. So, like I said, there's over 22 people pretending to be me. I do not ask you to send me money. I don't. I do not ask you to do in cryptocurrency. I don't do cryptocurrency. Okay? If you're new here, you don't know that. But if you've been here for a while, you know I don't do cryptocurrency. I will get into it eventually when it becomes legal tender. When I can take my Bitcoin, my Ethereum, my Dogecoin, or my whatever and go to Starbucks and buy a cup of coffee with my crypto. I can't do that. Answer the question. Wow, you're getting all excited. Apple, it's right here. We're going to take a look at it. Cool your jets. All right, so let's take a look at Apple for the impatient one. We're going to call you an impatient one because 55555 doesn't really make any sense to me. All right, here we go. Apple, a year ago today was at the yearly bottom. Company coming. Hey, Terry, how are you doing? Okay, the bottom of the year was Apple 52 weeks ago today. She shoots on up, hits 198, drops back down to hit 165, shoots back up to get the high of the year, 199.78. That was in the middle of December. From there, recently, look at the last 90 days. Now, 90 days ago today, we want to go to the 13th, January 13th. Where is it? Right. 90 days ago today. Hi, it's time to buy Tesla. Yeah, you have fun with that one. 90 days ago today, we opened up at 186.06. A couple of days later, we got a high of the 90-day period, 196.38. From there, she dropped down to the 90-day bottom, which is the same as the 30-day bottom. So let's take a look at the last 30 days. The 13th was a Saturday, so we're going to take a look at Friday. Okay, 30 days ago today, we opened up at 173. 173.15, okay? 173.15. She shoots up, pulls back. Look at this jump she made the other day. There and there. I don't know about you, but when you see two big jumps like that, okay, it's going to be a profit taking Monday, more than likely. Or continue to go up. I don't know. But let's continue looking. Now, the 30-day high was 178.67. If I sign up for Patreon, do you talk about cash secured puts and other side of the wheel? The Browns, yes, I do. I talk about all kinds of weird stuff that people bring up in the topic of conversation. But here, in this little forum here, I share one strategy, one strategy only. Because I'm a nice guy, but I'm really not that nice. I made some money on Apple puts Friday before they went back up. Well, that's good. Apple is still definitely a long hold. Okay, it's just going through a turbulent time right now. Well, Adam, I'm going to agree with you. However, this is just my opinion. However, when you see it jump from 168 up to 178 in 2 days, more than likely there'll be some profit taking come Monday. Is that true? Who knows? We'll see. Now, this is the last 30 days. Okay, the 30-day high, 178.67. She dropped down to the 30-day bottom, which was Wednesday. Okay, and that was 167.11. Okay, great. 2 days to the upside. Perfect opportunity to get in. However, look where the high is, 178.36. What was the 30-day high? 178.67. How much higher do you think it's going to go to challenge that 30-day high? I want to stop my drop serving business. Okay, Brown. Had nothing to do with the topic of conversation. Anyway, dividends all day, brother. Thanks, Joe, over here in the other comments. All right, so today, Friday's challenge, okay, was a challenge for a new 30-day high. Made a high of 178.36. The current 30-day high is 178.67. Not that far off. Now, do you really think if you jumped on the bandwagon Monday, it's going to continue to go up? It might. It might not. Let's take a look at seasonality, see what that looks like. Now, for those of you that are new here, seasonality is nothing more than 10 years worth of historical data. Okay, 1 year on top of another, on top of another. Why isn't this thing not working? Wow, it's waiting for data. That doesn't usually happen. All right, while waiting for that to load up, Wobbline, is that right? Wobbline Anderville? Well, good afternoon and welcome to the show. Okay, so while we're waiting for the history, okay, Wobbline. Oh, I sit corrected. Thank you. Thanks for joining. Okay, let's. You're new here, so just sit back, sit tight, see if this stuff makes sense to you, and we'll go from there. Okay, so the last trade was 176.55. Okay, currently we got a 176.13 over a 176.25. Did anybody see that? Huge, studious question. What type of funds are needed to say $10,000 a month passively? $250,000. 1% per week, 250,000 is 2,500. 4 weeks in a month, that's 10,000 a month. All right, so Apple. Now see who gets this, right? The last trade, 176.55, 176.13, 176.25. Both the bid and the ask are lower than the last price. That is the clue that the market maker is going to bring it down come Monday. Okay, you get that big run up right here, Thursday and Friday. Of course, it's going to be. Okay, what do you think about ABDE? ABDE? Let's take a look at that one. Okay, ADBE. All right, we'll take a look at that. Yeah, wait, you got it. More than likely. Okay, when the bid and the ask are both lower than the last price, That's the market maker telling you, giving you a little bit of a clue that he's going to bring it down come Monday. Okay? That's just, historically speaking. Italiano, Tony Montana. Okay, so the last trade, or the bid, if I want to buy it on Monday, what is your 30-day price prediction? I don't have one. Okay, my time's up. I do weeklies. I don't do monthlies. Okay, I'll take a look at something, take out the charts. I'll take a look at 4 different charts. I'll take a look at the numbers. Okay, I'm looking for weekly, not monthly. Tony Montana, how you doing? Okay, so if I wanted to buy it Monday, 176.25. The 175 is going 3 1/4. The 177 is going for 193. That's both over 1%. Okay, so if you want to buy Apple, don't get me wrong, Apple's a great buy. What does it do every year? It does nothing but go up year after year after year. Okay, so if you wanted to get 1% on Apple, buy it at the beginning of the morning, first thing in the morning. Sell somebody the rights to buy it from you for the same price you paid for it. Okay, the 176 is 176.25. The 175s are going for 3 1/4. Okay, you take off that 1 1/4 off there, you're getting $2. $2 on a 175. $2 divided by 175 is going to come to 1.14%. That's for Apple. Now, if you've been following along with Apple, let's see if it's up and now. No, still waiting for data. They've been going through a, what do you call it, update over the weekend. We got booted last night because they were doing an update, and it took me until this afternoon before I can get back on. All right, so that's Apple. Don't get me wrong, I like Apple. However, I did sell my Apple this week because it was only giving me 4% per week. Now, I do have Apple in a different trading strategy, in a different account. How much would I need invested to get $10,000 per month from dividends? Thanks. $250,000. That was quick, wasn't it? 250 grand will give you 10 grand a month. All right, now we're going to pick up from the list from last night. WBA, which is Walgreens. Yeah, because we were looking last night and things just didn't work out. We had to cut it early because we're having issues with Thinkorswim again. Ah, damn it. No freaking numbers. Let's check on a different account. Hold on. WBA. Nothing. Weeklies is the way to go. Thanks, Sage. Don't share the live. Encourage more viewers to share the live. Okay, this is great. We got a lot of people here, and we're having issues. Look, no numbers. Sorry, I missed your answer. The answer for $10,000 a month, you need a minimum of $250,000 to give you $10,000 a month passive income. 1 million will throw about 50 grand a year. No, 1 million would throw about 500,000 a year. Sorry, landscape exec. Okay, you got the math is. Thank you. You're welcome. Okay, the math is 1% per week. Safe, secure, predictable, consistent. 1% per week. 1% per week equals over 50% per year. So $1 million, 50% of $1 million is 500,000. Okay. So if you want to put your $1 million someplace that gives you 50 grand a year, hey, more power to you. That's 5% return. You put it in a savings account and give you 5% return. I'm still waiting for what's his name. There was some guy who said that dividends aren't the way to go. You can get more in a savings account. So I'm kind of curious. What savings account do you have that gives over 50%? Old school thinking, but it still adds up. Yeah. I am old school. I am. I got the gray hairs to prove it. I'm 60 years old. I already retired. What I make off of my income, off of my little nest egg, is got to last me on a yearly basis. And so 1% per week for me is just fine. Hey, Huxley, way to go. Landscape, exec, let, L-E-T. What does that mean, L-E-T? I'm missing something. All right, so that being said, we're kind of stuck because we're missing numbers here. So I can answer questions. So roll out the questions. Let's go while we're waiting. While we're waiting for getting that. Were you a successful trader? I still am a successful trader. I'm a CFA, and I am fairly certain 1% a week isn't feasible in any relative safe manner. Oh, I love it when the math is off. Really? Okay, so you to Alpha Wolf and Swampy Hemlock. Well, let's see. Now, this screen here, okay, this screen here is live feed to YouTube. So let's go check the numbers of the trades that I made this year. I love when people question me. I got no problem with it, don't get me wrong. All right, so here are my trades, which you can check for yourself. Week number 1, okay, week number 1, January 2nd. Macy's, General Motors, Ford, CVS, a whopping grand total of, what is that, 2.12%? There's 52 weeks in a year, 1% a week, do the math. Yeah, I get it, all right, I really do, okay? Now I'm talking about fees, taxes, all that kind of bullcrap too. This is a smart and safe way to invest. Thank you. Okay, so Alpha Wolf, are you seeing this? Do you have this pulled up on your computer? It gives you the numbers. Okay, week number 1, 2.1%. Week number 2, 1.3%. Week number 3 was my worst week, 0.85. Okay. Week number 4, 0.9. Week number 5, 1.03, 1.06, 1.9, 2.03, 2.32, 4.63. Okay, 3.9, 0.9, 1.2, 1.5, and then 1.2. That's just this account here. And look, got a grand total so far, running tab of this year, from the beginning of the year to where we are at this moment in time, 23.46% from week 1 to week 15. So in 15 weeks, I'm up 23% already. So worst week is still good. Yeah, I can live with it. I'm saying it's more. Yeah, I get that it's more. But if I say safe, predictable, consistent, I average 1%. Okay, I don't make 1% every single week. I don't. Okay, some weeks I make 0.85. Oh, tragedy. If I had 100 grand, 0.85 would be 850 bucks. When we calculate returns, do we only count premiums as percentage of total invested regardless of still long? Well, it's a whole different story. It is. Because now there are many times where I bought a stock at a certain price. All right. Where I bought a stock at a certain price, okay, and then I sold a premium against it for a certain strike price. And if the stock goes over that strike price, I get the difference between the purchase price and the strike price. I'm missing some of these questions. You make more money with a business. Yeah. Okay, Vanessa. Awesome. Great. However, listen closely because I'm seeing if you can understand the math here. Okay? Not that I'm trying to insult your intelligence or anything. Account number 1, 117,000 starting out. Okay, so I spend anywhere between 10 to 15 minutes a day. 10 to 15 minutes a day. 5 days a week. That comes to less than an hour a week. So I'm spending less than an hour a week on this one particular account that makes over $1,000 a week. That's 50 grand a year for an hour a week. Now you let me know what business you're in that pays you $1,000 an hour. 100K, I make 5 times that. Well, awesome for you. Why don't you share? Why settle for $850? No way. Okay. Again, great for you. Where to put money for a safe yet a decent return? Okay, you just got here because I've noticed names before. I've never seen this name before. Todd Schultz. Okay, you're new. Just sit back, chill. It's really not that difficult. It was created for a 9-year-old. Safe, predictable, consistent, 1% per week. Okay, now, for you, Miss Vanessa. Okay, Vanessa. Okay, you make 5 times that much. Awesome. Really? I have 5 different accounts. Okay, I share 2 of them with you people. What do you think I'm doing in the other 3 that I don't share? Okay, I dropped Apple because it was only giving me 4% in a different account. Okay, now I picked up other ones that are paying me a lot more per week. So why would I give up 4% per week on Apple and move to something else? Because 4% a week wasn't enough. Now, 4% a week, just for the fun of it, we'll do, clear this out of the way, 4 multiplied by 52 would come to a grand total of 208% per year for less than 10 minutes a day. Now, I understand you don't agree with what I do. That's perfectly fine, okay? But I dropped Apple because it's only giving me 4%. Now, 4% a week is over 200% a year for 10 minutes a day. Now, I'm kind of interested in what you do, and hopefully you don't do OnlyFans because that would creep me out. All right, so what does she say? All right, when you go into stock dips, or when you have stock dips, can you discuss how far lower your strike price when it calls you sell? Well, buddy, awesome question. Now, I've shared the story many a times. Target last year in July, I bought Target at 135. I took Target from 135 all the way down to 102. 135 all the way down to 102. I take a look at the high of the day, the low of the day. Let's see if we have anything pulled up yet. Still nothing. Damn it. Okay, I look at the high of the day, the low of the day, the opening, the close. I do some fancy math to figure out how much does the stock move on a daily basis. Then I take that and I do it 30 times because I want to see what is the average movement of a 30-day period, high and low. Then I will take a look at how many strikes out is there still halfway decent money. Target pays awesome premiums. So as Target's going down, I'm selling 5 strikes out of the money. So I'll give you my cow analogy. My cow analogy is if you buy a cow and he gives you a gallon of milk every week, great, everyone's happy. What happens when he starts giving you a half a gallon? Do you get rid of it? No. What happens when he only gives you a quart? Do you get rid of it? No. Anyway, needless to say, middle of July, I bought Target at 135. I took it all the way down to 102. It took 5 months to get back up to over 135 for me to sell it at a profit. Now, I did collect, I think, 3 dividends and about 20 some odd premiums every single week. Was it 1% every week? No, it wasn't. The first couple of weeks it was. The last couple of weeks it was. In the middle, it wasn't. Now, when I say I average 1% per week, once you average it out all 52 weeks, yeah, it comes to about 1% per week. Now, let's go see more of these questions. James, all right, well, where was I? Oh, holy cow, I missed all these questions. All right, Jose, as you can see at this moment in time, okay, something's going on with Thinkorswim. So it might be another early night. I can't help it. Nothing I can control about that. As awesome, Giovanni, I like that name, Giovanni. As someone who is beginning trading in the U.S., what broker website should I be using? That I can't tell you. I use Thinkorswim. Not that it's great at this moment in time, but it is weekend. Nobody trades on a weekend, so it is what? 9:30 at night? So that's when they do their updating to the website. Okay, now, Thinkorswim, the one I use, was bought out by Charles Schwab. Now, Charles Schwab is taking everything from TD Ameritrade and transferring it over to Charles Schwab. So this is why we're probably having issues. I would not invest $25 with this guy. Well, Landscape Exec, thank you for that. I'm going to take that as a compliment. Because they say the more haters you got, the better you're doing. So, I like haters. All right, let's load some penny stocks and 10x your money. All right, Nick, perfectly okay. If you want to do penny stocks, great. Me, I'm 60 years old. I do not want to have to wait for that penny stock to go to something halfway decent and to pay out dividends. Because I know penny stocks don't pay dividends. I'm here for safe, secure, predictable, consistent 1% per week. That is through a dividend stock, not through penny stocks. I agree 100%. Been teaching people selling premiums for years. Would love to collaborate. MC, DM me with your number. I'll give you a buzz, and we'll like that. Yeah, Sage, 50% a year is nice. Okay, that's with this account. I have other accounts. Now, you heard me say I dropped Apple because it was only giving me 4% a week. That was this week. 4%? No, I don't want that. So I unloaded that and I jumped into something. I think it was giving me 10% a week. That makes me a little happier. In a different account with a different strategy with a different risk reward scenario. Okay. Let's go. Landscape. He's not asking you to invest anything in him. Yeah, some people have a difficult time with. Yeah. YouTube should be open. Okay, is YouTube open? Can you see the screen on YouTube? What's the difference between stocks and Forex? Whoa, stocks and Forex. Stocks is actually a tangible item. Okay, when you buy a stock, let's say in Walgreens, Walmart, Emerson Electric, Johnson & Johnson, you own a portion of the company. Forex, you don't. Nick Chambers, I'm entertaining you. Isn't that lovely? Vico, how are you doing? Nick Chambers, interesting. I entertain you. That's a wonderful thing. I'll send you a bill for my entertainment. Fascinating Football, hey everyone, how you doing? From Estonia, well, that's awesome. Giovanni Rick, stocks, Forex, stocks and or Forex currencies. Yeah, I tried the Forex thing once years ago. You got to sit in front of the computer all day. I'm in front of my computer for 10 to 15 minutes and that's it. Yeah, MC Trading is right. Stocks and equities. And Forex is currency. Equities is business. Yeah, okay. Giovanni, MC Trading, thanks. No problem, no problem. Okay, Tara Joy. What do you think about OneCo? This is an oil stock. What stock? 1% per week. I like money, yeah, so do I. Walmart stock held up better than most on Friday. Okay, that's probably true. Well, anyway, we're still waiting for this thing to load up. I mean, I checked all the accounts. What are we doing here? You guys don't need to see that crap. Nothing. Damn it. All right. You trade any futures, selling puts on them? I used to. I used to do futures. Now, when I did futures, I always followed Mr. Williams, and he always talked about the commitment of traders reports and how to read a commitment of traders reports, if you know how that works. Is Halliburton on your list? Halliburton is on my list, but I don't know if it's on the list for next week. Let's try out Halliburton. Oops. Not in April, not in March, not in February, January. When the heck is Halliburton's dividend? How do we find you on YouTube? Well, you find me on YouTube by going up here to the bio, right there where my little face is up in that top left corner. And you click on that, and that'll bring you to that 10-minute trader link. And that 10-minute trader link will take you to all of my social media. You got the YouTube, Twitter, Facebook, Instagram, podcast. I've been doing podcasts for over 4 years. LinkedIn, books. I've read about 13 books. I'm on book number 14 at the moment. Patreon, TikTok, live on YouTube. It's right there. Let's go back. Yep, no numbers. Damn it. You should show how dividend stocks compound and how fast they can compound and make income passively. Well, Alan, it's funny you should say that. Let's go here to the 10-minute trader. We'll click on the hamburger up here in the left-hand corner, and we'll go to weekly compound interest calculator. Okay, now let's say hypothetically we want to start out with $1,000. Put $100 a week in. Let's say you want to get a 1% per week. Okay, and let's go 10 years. What does $1,000, starting at $1,000 and $100 a weekend, and it comes to grand total of $1,900,000 in a 10-year period, with starting out with $1,000. You say you don't like Forex due to the time it requires. What do you trade exactly? Dividend stocks. It says dividends for weekly cash flow. Sales premium on stocks with cash flow. Thank you, MC. Yahoo Finance could not be an option for tonight. Why is that? How does your system work in a down market? Well, I'm going to refer you back to rule number 1. Never buy something you do not want to hold long period of time. LA Soundwave, how you doing? Okay, so the reason why I say never buy anything you do not want to hold long period of time, because you just might. Okay, let's see if Yahoo Finance is open. Yahoo Finance. Okay, WBA. Here we go. Quote for WBA. Okay, loading the chart for WBA. All right, there it goes. Chart. Live cast. Mickey CL. Colgate-Palmolive. What do you think of monthly paying PIMCO dividend stocks? Wow. GC. PIMCO, did you say? You got to give me a ticker symbol. I don't know what PIMCO's ticker symbol is, so I really couldn't answer that question. Okay, now, most of the time, I know exactly what the ticker symbol is on most stocks. PCN. PCN. Well, let's take a look. Okay, it's 1337. Let's take a look at some historical data on it. Now from there, I want to take a look at how often they pay their dividends and how often they increase their dividends. Dividends only. Maximum. Okay. 15, 14, 13, 11, 10, 9, 8, 7. Okay. Wow. 2022. 202. Okay, so here's the issue I have with PCN. Okay, if you've been looking at the numbers right here, okay, 2002 they were paying 11-cent dividend. 2004 they were paying an 11-cent dividend. 2007 they were paying an 11-cent dividend. 2009 they were paying an 11-cent dividend. 2013 they were paying an 11-cent dividend. Okay, 2020 they're paying an 11-cent dividend. 2023, 2024, they're paying 11-cent dividend. So my question to you is, they've never increased their dividend. It's been consistently the exact same. Stock W divvies just pile it into ET. Okay. They pay around 12%. Now, is that 12% per year or 12% per month? Because the way I'm looking at it, clear, 11 cents divided by 13.45, that comes to 0.08 a month. That's not even 1% per month. Okay, so CLX are good looking at this coming week. All right, CLX and CVS. CLX, CVS. All right, we'll take a look at them if we get it back up and running. Okay, so back to PCN, PIMCO. ET is about 9 and 10%, but they're also appreciated about 20. Yeah, I've looked at ET before. It doesn't thrill me. Okay, so you want to invest in this and get 12% a year. I don't never talk to anyone about, changing their trading strategy. Okay, now I get 1% per week. So why would I invest this company for 12% per year? Okay, because 1% per week comes to 50% per year. Okay, for your own safety. Okay, interesting. Monica, you're new here. I get that. I understand that. Let's go right here for a second. Okay, as the little princess. Okay, here's a picture of me. Behind me is a dividend calendar, which I had to do on a whiteboard in those days because they didn't have them. Okay, now, how old is this video? This video is 11 years old. What does that mean? That means I've been doing this exact same thing for over 11 years. 1% per week. Okay, that's over 50% per year. Why, for my personal safety, would I go from 50% a year down to 12% a year? I'm kind of curious. Trading at the peak with treasury yields over 5%. What's the next 8 quarters look like? Long or wait? Wait, did you say 1% weekly? Yes, 1% per week. Very good. He's been investing many years. He does what he's doing, and I'm happy with 50% a year. Thanks, Jose. Okay, so this may...
You do 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year, and if you get at least 2%, that's 20. That's close to 50% a year. 50% per year. That's cool. And
That was me 11 years ago. Okay, I'm keeping my 11-year-old daughter. She was 11 then, but I traded this. This strategy came for her. It had to be simple. It had to be safe. It had to be predictable. It had to be consistent, and there's no way she could lose. Okay, everybody loves that last one. No way you could lose. The 5 rules. Rule number 1, never buy something you do not want to hold a long period of time. Do you know the latest news on XRP? No, XRP is not a dividend stock, so no. Can you explain more how the options work in general? Okay, let's say MIC, SRF. Let's say hypothetically you have an old car sitting in your yard. Slap a for sale sign on $1,000. Tom comes by and says, hey, I'll give you $1,000 for that. Take my $100 right now, hold it for me. I'll come back Friday to give you the $1,000. Friday comes. He either comes back and gets a car for $1,000 or he doesn't. The stock either goes up or it doesn't. So if I buy, let's find one right here. WBA, Walgreens. Okay, if I buy Walgreens tomorrow morning, or Monday morning, okay, right now it's at $17.90. $17.90. I can sell the 18s for over 1%. Okay, 1% of $17.90 is 18 cents per share. 18 cents per share. So if I get more than 1% per week, okay, and the stock goes up over 18 on Friday, then most likely I'll be back into cash the following Monday. If it is under 18, 17.99, 17.98, 16.50, 14.13, whatever, if it's under 18, then I will take that stock into the next week. But I will still keep that premium, that 1%. Okay, 1% every week. Safe, secure, predictable, consistent. Okay, now, rule number 1, never buy something you do not want to hold for a long period of time. So if I buy Walgreens first thing Monday at the going price, right now, $17.90, I own that stock. And then I can sell it to Tom for $18 anytime between Monday and Friday. I like PLTR. Well, alrighty then. 50% on dividends. Okay, apparently, GC, you weren't paying attention. Okay, I did not say 50% on dividends. 50% return using pre-qualified dividend stocks, coupled with covered call. Hi from Cincinnati, Ohio. I've been there once. I was driving to someplace important, and I stopped in Cincinnati. Didn't stop for long. How do you perform in downtrends? Do you get stuck in positions and use stops? I do not use stops. Okay, so apparently, Robert, you missed the part where this current strategy that I am teaching here for free, no strings attached, okay, was created for a 9-year-old. Number 1 rule, we're trying to teach a 9-year-old, it has to be simple. Simple. Safe, predictable, consistent, and no way to lose. Okay? Simple, safe, predictable, consistent, and no way to lose. That was the 5 criteria that I had to meet when trying to teach a 9-year-old how to do this. So how do I perform in downtrends? Well, a downtrend, interesting question. Okay, money never money never disappears. It just changes hands. So one stock's going to go down, something else is going to go up. All right. Now, if a stock is in a downtrend and I buy it for a reason. Do you have videos on how to trade? Oh, Mark, you're new here. So yeah, you can go to the10minutetrader.com, slide down, click on over to YouTube channel, okay, and you'll see YouTube videos, videos dating back. I think the oldest one here is 2011 years ago. Okay, this is when I was teaching the little princess, the 9-year-old. She was 9 when I first came up with the strategy. But 11 years, yep, there's me again. There's me again. Yep, all these videos from 11 years ago. Oh, there's one of the little princess.
Hi, my name's JC, and welcome to the 10-Minute Trader. I'm 13 years old, and 2 years ago, my dad got sick and tired of me asking for money all the time.
Who's ever had a 13-year-old get sick and tired of him asking for money? So I taught her how to do the trading strategy. Again, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent. And no way she could lose. Tesla. All right. Zerto. No. Okay. I don't do Tesla. Tesla does not give out dividends. So here's an idea. Now, Tesla, hypothetically, 150 bucks. Okay, fine. Dandy. Now, what happens when it goes down? Does Tesla continue to give you dividends? Some kind of compensation for you investing your money? Or do you just sit and wait for capital appreciation? You cannot spend capital appreciation, but you can spend dividends. Okay? Now, if you want to buy Tesla, hey, more power to you. I don't do Tesla because they don't pay out dividends. There's a lot of companies I don't do because they don't pay out dividends. How many companies are there? Well, funny thing you ask. Let's take a look. Now, this company here is called FinViz, Financial Visualizations. What time frames do you use to analyze and why? Well, Giovanni, I use the 1-year chart, the 90-day chart, 30-day chart, and then the seasonality chart. All to give me an idea of odds and probabilities of which way it's going to go the next 4 to 5 days. That's it. Monday morning, I want to know what it's going to do in the next 4 or 5 days. Could care less 3 or 4 months down the line. I could care less 3 years down the line. Don't care. To the next 4 to 5 days. 4 to 5 days. That's all I need to know. Okay, what has it done for the last year? We'll get to that as soon as it's back online. But here we go. FinViz, Financial Visualizations, finviz.com. This number, I'm going to show you one something kind of like this. You ready? Get rid of that thing. Pop-ups. Pop-ups. 9,498. What does that mean? That means there's 9,498 stocks you can choose from first thing Monday morning. I only look at 150. Why? Because only 150 meet my criteria. 20 years of increased dividends and weekly options. A few other things too. Thank you for sharing the invaluable information. Surf King 007. Way to go. Okay, so 9,498. How do you choose? Honestly, 9,498. That's 9,500 stocks. Okay, well, what I do, right up here, I want someone who's going to share the profits. What do you mean by sharing profits, James? That's a question. 2 different kinds of companies. Ones that share profits and ones that do not share profits. Okay, now, Tesla does not share profits with the investors. You and I, when we buy and sell stocks, we are the investors. I want cash flow. That's me. This channel was created for people who want a consistent cash flow. What is paying out dividends and why is it important? Giovanni, what do you think of Pfizer? I love Pfizer. Pfizer's on my list. But however, let's finish up with this. Okay, so 9,498. That's 9,500 companies. 9,500. Okay, so first thing I want to do, dividends. Only want companies that pay out dividends. Okay, fine. So let's click on that, and I'm going to go for a 2% yield. Okay, 2% really sucks, but it is what it is. Okay, so from the 9,500, let's get rid of this thing. We're down to 3,300. I went from 9,500 to 3,300 in one click. Okay. What platform do I use? I use Thinkorswim. Over here, I want to make sure it has options. Why? Because I want weekly cash flow. All right, weekly cash flow. Now, this website does not distinguish the difference between monthly and weekly options. So I click on the options, make it optionable. Now I'm down to 1,975. That's still a lot of companies to go through. All right, so rather than do that, why not just stick with the Dividend Kings, Dividend Aristocrats, Dividend Champions? How many stocks do you recommend per week? All right, Sage, that's going to be different from everyone. Okay, like I said, I have 5 different accounts. I have one account that has 5 stocks in it. I have another account that has 7 stocks in it. I have one other account that has 25 stocks in it. Okay, it averages depending on what your goals are. All right, so if you're just starting out, I would suggest, 1 or 2. Just get used to it. The stock market's been around since 1602. It ain't going anywhere. What is the time frame you typically open a long position before the EX dividend date? 2 weeks. Well, let's go back to this one. Right here. Right there. Go here, and right there. You've got to be kidding me. It's not even giving me this. Nothing's popping up. How many stocks do you recommend per week? That's going to be totally different from everyone else. What is the time frame you typically open long? Okay, I usually get 2 weeks before the EX date. Now, the EX date's not showing up because Thinkorswim is not working at the moment. All right. Do you buy or sell if it's in consolidation? Stone or OG? You're definitely getting a little complicated. Okay, so I don't know how many times I gotta repeat this. It has to be simple. It was created for a 9-year-old little girl. I showed you the picture of her. Okay. Oh, that's not her. There she is right there. That's when she was 13.
Oh, he taught me a few nifty tricks in the stock market and how to make money. And so, I figured I'd share them with the world. So take a look around and we'll show you how to make some money. Have a nice day.
Of course, this one was 10 years ago. ECC's a monthly. Do you buy or sell if it's consolidation? Okay, so interesting question. Really is. Now, I try to explain to people, you're making it more complicated than it needs to be. Okay, when I say simple, I mean simple. I look at when is it paying its dividend? Okay, when is it paying its dividend? Number 1. Number 2, what does the 1-year chart look like? Okay, first thing I want to see in the 1-year chart, where's the high? Where's the low? Where was it a year ago and where is it now? Okay, I want to see quickly where it is, where it was, and what it's doing currently. Right now, she's going down. Now, this is Walgreens. It's going to the downside. Now, I like Walgreens. Why? Well, Walgreens is over 100 years old, number 1. Number 2, I sure wish it was simple for me to understand. I don't understand option trading. All right, Golden Arrow. Let me see if I can make you understand this. Okay, Walgreens, you've heard of it. Walgreens is in every major city across the United States. They've been in business for over 100 years. They've increased their dividends consistently year after year after year. That should be pretty simple right there. Okay, now I'm not telling you to look at Joe's Pizza or Sally's Seashells or Tom's Tweedledees. I'm not. These are companies you've heard of. Walgreens, Wells Fargo, Bank of America, Ford, General Motors, Home Depot, Colgate-Palmolive, Procter & Gamble. You've heard of every single one of those. How's your daughter doing now in the stock market? Okay, to be totally honest with you, all my kids do not like money whatsoever. They don't. Seriously. My son's a bartender. My other son is a cook. And my daughter, who used to be the original 10-minute trader, she washes dogs. She does. She works at a doggy daycare. And she washes dogs all day long. She loves dogs. Doesn't care about money anymore. Can't help you out. Walgreens did cover the dividends recently. Yes, Dean, you're absolutely correct. They did. So back to where it needs to be simple. Okay, I look at how often have they increased their dividends. Okay, my main concern is if I buy something, am I continuing to get higher and higher dividends? Would this way of earning active income be valuable for someone busy throughout the day? Nice work. Do you answer? Do you always sell out of the money calls, and how far out? Well, Robert, I buy at the money. I buy the stock and I sell at the money. It gives me the highest rate of return. I'm a cook, trader, respect. Okay, not. Hey, why not? You're back again. So, where was I? As I get old, I lose track of things. Thanks for the dividend contenders list. All right. This is Mike from your morning class. Hey, Mike, I'm glad you like that list. Now, that list I have not gone through yet. Okay, now, for those of you just asking what the dividend contenders list is, those are companies that have increased their dividends from 10 years consecutively up to 24 years consecutively. They haven't made the aristocrats list, they haven't made the champions list, and they haven't made the kings list yet. But they have anywhere between 10 years of increased dividends all the way up to 24 years of increased dividends. So a lot of those companies are good companies. But I haven't figured out yet, well, I haven't really had the time to find out which ones pay weekly, which ones have weekly options, which ones have monthly options, and which ones pay consistently dividends. Okay? Trading dividends isn't the same risk profile as sell out of the money calls. Okay. My TOS is locked out. Yeah, mine too. I work 8 a.m. to 5 p.m. in aerospace. What's the best dividend stock screener to use? Okay, could you possibly finish a thought? You are rambling and hard to follow. Yeah, Frank, I got ADD. I really do. I got a big problem with shiny things, shiny objects. Okay, every time I see one of these screens pop up, I go and lose track. So as I was saying, it has to be simple, safe, predictable, consistent, and no way you're going to lose. Okay, number one, never buy something you don't want to hold long term. Number two, never sell at a loss. Number three, minimum of 20 years of increased dividends, weekly options, and the numbers all got to work. What do you think about NG and AG? Yeah, as you can see, Thinkorswim is locked up Friday night, last night, and today. Locked up for some strange reason, doing maintenance on it. Where do you look to find dividend information you're getting? Well, new guy, Google. That's it, Google. Dividend Kings List 2024. Okay, there's 55 companies that have increased for more than 5 decades. 5 decades. That's 50 years or more of increased dividends. Dividend Kings. Go to Google. You know what? Here we go. Watch this. It's really not that difficult. Google. Dividend Kings List 2024. Is this the right one? Dividend King. Oh, there they are, right there. See? Dividend Kings List. RPM, 50 years. Gorman Rupp, 51 years. Consolidated Edison, 51 years. So on and so forth. What am I looking at? What is this stupid thing? I don't like this one. Anyway. Can call sell positions be eligible for dividends? AGNC, what do you think about this stock? Unfortunately, I can't think of anything stock at the moment because it's not working. Okay, we're still waiting for one of these to work. Okay, nothing's loading, so I couldn't tell you what. Now, can call sell positions be eligible for dividends? Okay, back up my phone. Okay, now you have to buy the stock before the EX date. 4 dates you need to remember. 1, the announcement date. 2, the EX date, the last day the stock trades before the dividends paid. 3, the date of record. Whoever owns the stock on the date of record is eligible for the dividend. 4, payment date. There's only 4 dates you need to remember with the dividend stocks. We buy the stock and then the option chain call sell. Yeah, buy the stock. That means you own the stock. Once you sell the call, you're just selling somebody the right to buy it from you. You still own the stock. If you take it into the dividend play, you get the dividend. Dividends every month. AGNC. All right, Ed, I can't look at it. Thinkorswim is not up and running. We had the same issue last night. All right. What's the last stock you received dividends on, and what was your rate of return? All right, Stoner AG, my average rate of return is over 1% per week. At this moment in time, over 1% per week. All right, so let's go back to these two accounts right here. Account number 1, which has started out in the beginning of January with 117,000. Okay, I've took out 14,000 already. It's up 23.46% so far this year. Account number 2, 100,000 in cash, 100,000 on margin. I do not suggest any of you use margin until you understand what it is and the risks involved. That account is up 54% already. 15 weeks, it's up 54% already. What's the last stock you received? You already returned that one. Calvin Hill's here. Hey, Calvin. AGNC looks down here. Okay, why naughty? AGNC. AGNC. Let's take a look at it. All right, AGNC is $9 stock. Okay, again, 12 cents, 12 cents, 12 cents, 12 cents. Okay, so explain to me in a manner in which I would understand. Why would I buy a stock? In 08, it was paying $1, then $1.20, then to 85 cents, then to $1.50, then to $1.40, then dropped. Why would I buy a stock that drops their dividends? 140 to 125, 125 to 65, 65 to 22, 22 to 20 to 18, and it's been 16 to 12. Yeah, that's a big fat no. Okay, I like stocks that increase their dividends consistently. Why would I buy a company that decreases? Okay, I'm buying something that's going to give me less money every year. To me, that makes no sense. Okay, so yeah, no, AGNC is not on my list. Dividend stocks account impersonating. Yeah, there's 22 of them. Better to spread out over 10-year stock. Just go with 5 or less. Okay. Yeah, I usually do anywhere between 4 and 6 stocks per week. JEPQ and JPI are both ETFs. Different strategies, different accounts. Not this strategy. Thank you, Ed. I'm right. Okay, I don't know what I'm right about. Okay, but I appreciate that. Yeah, AGNC, if you like it, I'm not going to talk you out of it. Really, I'm not. But not for me. I like safe, consistent, predictable 1% per week. Now, I do that with over 150 companies. 150 companies. They've increased their dividends for more than 20 years consecutively, every single year. Higher and higher dividends. Still standing with your C Corp account? Well, I have 5 different accounts. Not all of them are in the C Corp. Oh, can we do with SCHD? You can do a lot with SCHD, but not this strategy. SCHD. SCHD. I still believe we get a bounce Monday. Okay, it may not. Okay, so HCAD. Okay, now they've only been paying dividends since 2011. Okay, that's 13 years. Does anybody see the problem with 13 years as opposed to 20? Share price drop by dividend. Yep. Are you paying taxes twice? You must love Uncle Sam. I don't pay taxes at all. But that's something you need to talk with a tax strategist. I'm inspired seeing senior citizens share wisdom with the young guns. Well, you ever hear the expression you get more flies with honey than you do with vinegar? Bert. But yeah, I don't consider myself a senior citizen. I still play soccer in the adult league. Okay, so I still get out on the field and run around like a maniac. And I have a lot of younger guys that can't keep up with me. So yeah, I appreciate that. Can you give us some examples of good dividend stocks? What's your favorite dividend stock? At this moment, Macy's. Tax evasion? No. Interesting strategy. All right, TravMan. Huge difference between tax evasion and tax avoidance. See, I'm at that point in my life where you really got to be leery of what you're saying. What do you mean you don't pay taxes? I pay plenty of taxes. It just all depends on which taxes you're talking about. Okay, I pay my real estate taxes. I pay my sales taxes. I pay taxes on stuff that I buy. I look young because he's smart. Doesn't make him old. Okay. I'm 60 years old. My kids are in their 20s and 30s. I said, you guys want to go outside and wrestle? Even at 60, they still say, nope. Can I be a millionaire if I invest in VOO and SHC? Sure, just all depends on the time frame you're looking at. You can be a millionaire buying anything. You ever hear? They used to have a joke called I won the Italian lottery. I won $1 million, $1 a year for 1,000,000 years. Okay, let's see if we're up yet. Okay, so anyway, SCHD. All right, look at it. It was 12 cents, 14, 21, 26, 23, 25, 27, 28, 30, 31, 24, 33, 36, 41, 41, 35, 49. Okay, it's increasing, but it's only been paying for 13 years. I like your style, pretty cool. Thanks, Donor OG. Yep, I gave that stuff up for the year because I got a goal for the year, and then I'm gonna have a nice doobie. I wish I looked like that when you're at 60. Yeah, I got good genes. Not necessarily. My brother doesn't look the same, and neither do my sisters. I'm 34 years old, so by 67. Wow, you're 34. Okay, 67. Why 67? I retired at 60. I had enough money, and it's like I make enough to be comfortable. There's plenty of dividends in 10 years to 2-year, 5-year treasuries, but you lose money as they. All right, fast track. There's plenty of dividends in 10 years. 2-year, 5-year treasuries, but you lose your money as they. Wow. Gen X. Yep, I'm a Gen Xer. Now, fast track 66. I don't quite understand what that question is. Okay, there's plenty of dividends in 10 years. 10-year, 2-year, 5-year treasury. Yeah, you have good luck with that one. Because I know that the 10-year treasury notes is paying, what, 5.5%? Okay, if you know what? If you're happy with 5.5% per year in treasuries, fine. More power to you. I don't. Okay, this is my trading strategy I'm sharing for free. Okay, what about NRT? Okay, are we up yet with Thinkorswim? There it is. We're actually up. Okay, but are we working? Okay, hold on a second. Let's go to the good one. This one. That one's not up. Okay. MGLD hurt on Friday, but I was low volume sell-off. Okay. I started to invest about 8 months ago. Already have 7,000 in Roth, and I just invested in V. Okay. You know, if it works for you, fine. If you're interested in something different, sit, chill, see what happens, see if it makes sense. The strategy is buy 100 CHD and sell a call option at the price higher than the market. Yeah. Do you teach trading? Yeah. I'm using FinViz for now. Okay, FinViz doesn't have weekly options. It doesn't allow you to figure out which ones pay weekly. Now, let's go back here. Still not there. Okay. Definitely don't want that. What the hell am I looking at? All right. All right, so we're back online again. So let's take a look at something. How can I sign up for your class? All right, Ed, if you go up here to the bio, all right, and go to the10minutetrader.com, okay, the10minutetrader.com. Better yet, you can always DM me your phone number and I can give you a call, because I do call people when they do that. How do you feel about MPW. We'll write that down. MPW. All right, that's on the list. Now, apparently, Ed, right here, the10minutetrader.com, right there, live trading. Okay, live trading, click on that, and that will bring you to my Patreon, which is that's where you sign up. All right, let's go back, because I think we're live again. Okay, there's Apple. Well, now, we already looked at Apple. We already decided Apple's a no, because I think, personally, with this right here, okay, Thursday's up and Friday's up, I think this is going to be profit taking on Monday. That's just my personal opinion. Hey, Ellie Samway, thanks for that. MPW is a no, because that's a monthly, and I don't do monthlies. Reason why I don't do monthlies, just doesn't pay enough money. Okay? Now, back to the list, because we're up and running again. WBA, we already did that, right? Walgreens. Let's quickly go over Walgreens again. WBA. Fuck. No! Not having Walgreens. Globe Life. GL. Yeah, why is there Apple but not anything else? Yeah, not even give me numbers there either. No numbers available. Yeah, I got that. JEPI is another ETF. Okay, I do ETFs, but not in this particular strategy. I'd be happy 1% per week. Sage, it's excellent. Well, you can always join us. We have a group of about a little over 24 people. That's it, only 24 so far. And, you know, more the merrier. The main focus is to help everybody in the group get a safe, secure, predictable 1% per week. Boots cut dividends. Okay, I will. You got it. Okay. Called Schwab earlier, but they told me they did change, so I don't know. Okay. Now, as I was saying, I have a couple accounts in TD Ameritrade, hasn't switched over yet. I have a couple accounts in Schwab that have flipped over. J. Lee Robinson, Vice. Okay. I don't know what to say about Vice. I really don't. If you guys got to come up with better questions why I can't look at Squat. VC. VC? Never heard of VC. Oh, we were looking at SCHD. All right, let's finish looking at SCHD. Okay, number one, they only paid 13 years of dividends, and they haven't consistently increased. They go from 59 to 62 to 52 to 70 to 64 to 70 to 60 to 76 to 66 to 61. That's not increasing. Okay? Now, they do pay once a quarter. I own JEP in my brokerage. Okay. I was told if you have $8,000 in JP, you can get $100 a month in dividends. That's $1,000 a year. Okay. Now, my math, okay, $8,000, okay, multiplied by 0.01 is $80 a week. Okay? Now, multiply that by 52, that's $4,160 a year. Vistian, long time ago. Okay? Guys, Giuseppe Marioma. Mario, is that right? Mariomas? Giuseppe? Okay, so $8,000, right? $8,000 a week. 1% of 8,000 is 80 bucks. 80 bucks per week multiplied by 52 weeks in a year, that's 4,160. Okay, but if you like what you're doing and it works for you, perfect, fine. I have nothing against what people do. If it works, if it ain't broke, don't fix it. Okay, now this does require 10 to 15 minutes every morning. 10 to 15 minutes every morning to get 50% per year. Now you only have 8,000 bucks. 50% a year is 4,000 bucks. Okay, if you're doing that 1,000 bucks a year, okay, if that works for you, stay with it. But for me, that doesn't work for me. This on 1,200. Okay. Giuseppe Mario Mazzola. Cool. Okay, now my family comes from southwest Italy, just below Naples. What if it was $100 per week? Yeah, that's 50. Yeah, okay, that's about right. $100 a week is $5,200 a year. Oh, you know what? Let's see what it would be compounded. Compounded, compound calculator. All right, weekly compound calculator. Are you ready for this, Giuseppe? We're going to put $8,000 in there. $8,000. Okay, no weekly deposit, so we'll get rid of that. We'll do 1% per week. 1% per week, and for 1 year. All right. Chevrolet, how are you doing? How do I join Patreon? Patreon, you join. Give me a second. Okay, so 1 year at 1% per week, compounded, is 13,421. Okay, so your interest earned would be 5,421. That's starting out with 8,000 and getting 1% per week, compounded for 1 year, 5,421. Okay, how do you join? All right. All right. Jameson Barfield. All right, Jameson. My suggestion first, go up here to my profile, DM me. Send me a number, I'll give you a buzz. Okay, if you want to just join and avoid all that, go to the10minutetrader.com, and it says right there, see it says live trading? Okay, now this screen here is being live broadcast on YouTube. That way it's easier for you guys to see the numbers, which still ain't here. Okay, we're still having issues with Thinkorswim tonight. Chevrolet, hello. Do you use Charles Schwab Thinkorswim? Yes, I do. Okay. So, hey, Jordan, how are you doing? So, do you get paid every Friday with 1%? How do you receive your 1% a week? Oh, Jordan, easy question. I buy my stocks first thing Monday morning. Okay, stock market opens up at 9:30 a.m. Eastern Standard Time. So, I buy my stocks at 9:30. At 9:31, I sell my options. So I buy and sell at the exact same time. It's called a covered call strategy. So you're buying the stock and selling the option at the exact same time. I get that premium that moment. Okay, I can take that premium out of my account, transfer it onto my debit card, transfer it to my checking account, whatever, and spend it right away. If everything works out, I'll be joining at some point, okay? But I need another LLC set up first. Why not? That's an awesome idea. You put it into an LLC, it saves you against what's called litigation. Litigation's one. If you have it set up properly, you can avoid probate. Okay, when you pass, you can just assign one of your children as part of the corporation or the LLC. Also, you can pay less than taxes because a corporation or a company is paid less tax rate. All depends on where you're going to open your LLC. Different states have different tax rates. Good idea. Very wise. Why do an LLC? Different tax rate. Why do you need margin to sell covered call? Just saying, you don't need margin. Okay, my suggestion is do not use a margin account unless you know what you're doing. If you're new and you're asking questions like this, I would say do not do a margin account. You throw money into an account, they automatically give you a margin account. You have to call them up and say, no, I don't want a margin account. In a down market, you lose twice as fast. Granted, you make twice as much on a good time, but you could lose. I suggest you do all cash until you understand what's going on, until you get good at it. There are some people in the morning trading group that still do paper trading. Hell, I've been paper trading for 20 years, and I consistently do it. Why? Because I always come up with new trading ideas, and I don't want to risk my own money. So I do paper trading. So I say, am I right with this strategy? If I'm right, then I'll put real money into it. Right? I'm working on a new strategy at this moment in time. The return on it is freaking ridiculous. 8 to 10% per week. That's nuts. Okay, but I'm not putting real money into it until I know for sure. All right, do you need margin call? No, you don't. All right, it's been an hour and a half. We're not doing squad here. These are all the positions I got for this week. Do you think the wars that are going on in Israel and Iran are going to affect the market for Monday? I couldn't honestly tell you. I don't know what's happening on the other side of the world, how it's going to affect General Electric, Home Depot, Lowe's, Wells Fargo, Bank of America, Colgate, Palmolive, Clorox. How is what's happening on the other side of the planet going to affect those companies? Seriously. Will you look to enter the market Monday with what's going on in the Mideast? Yes. Short sells? No. Do you teach calls and puts? Only calls, Ed. Okay, only selling call. Okay, remember, this was made for a 9-year-old little girl. It had to be simple, had to be safe. Weapons sales. Well, I don't think Colgate-Palmolive sells weapons. Okay, I don't see weapons at Walmart, and I don't see weapons at Home Depot, and I don't see weapons at General Electric. But I understand what you're saying. Look what happened to the Ukraine war. The market continued moving up. Yes, it did. Okay, you stimulated the economy. Why? Well, because troops need, what do you call that? Toothpaste, toothbrushes, hairbrush, toilet paper, chocolate bars, cigarettes. It's the weird shit. Okay, companies that have been in business. All right, here's an idea. Okay, higher, shorter stocks, ER on ER. You can strangle works. Okay, probably. Now, think of it this way. In the last 100 years or so, or the last 150 years, we've seen World War I, World War II, Vietnam, Korea, the stock market crash of 1919, the Great Depression, the oil embargo of the 70s, what else? Y2K, the dot-com bust, the economic crash of 08, the financial crash, the housing crash in 08, and then we had the pandemic crash where everything lost back in 21. However, you have companies that are over 100 years old that consistently increase your dividends through all that crap. Okay? You have companies that have been paying out increasing dividends since Kennedy was alive. Higher and higher dividends. There's a company called GPC, General Parts Corporation, most unsexiest company there is. They sell aftermarket parts, spark plugs, wires, air filters, wiper blades, mud flaps, crap like that. They've been increasing their dividends for over 70 years. 7-0. That's seven decades they've been increasing their dividends. Okay? Now, they've been around for all these wars, all this economic crashes and crap that's going on, but they're still increasing their dividends to their shareholders. How long do you think it will take to learn how to do calls? Ed, I taught this to my 9-year-old daughter in 15 minutes. Okay? It's very simple. You get a list of stocks. There's about 150 of them that have increased for 20 years or more and have weekly options. Simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list. That's just 4 lists right there. Over 150 right there. 150 companies right there that fit the criteria. Okay? When do they pay their dividend? Okay, well, they pay their dividend. Is that up yet? All right, check this out. Here we go. Clorox, Lowe's, Fuller, Citibank, Procter & Gamble, General Dynamics, Warner Brothers, Cisco, American Express, Bristol Myers Squibb, Globe Life, J.P. Morgan, AbbVie, PNC, Abbott Labs, General Electric, Hormel. Come on, you guys heard of all those. This is the dividend calendar, when they pay their dividends. Okay? I also signed up and wanted to learn from the master. I wouldn't say if I'm a master. How many years do you plan on keep recommending stocks and options? I don't recommend anything. I don't recommend anything. But to answer that question, Sage, okay? Now, I already told you my 3 children have no desire about money whatsoever. Weird. I guess they're waiting to inherit everything I make. But my grandson, he's 4 years old, okay? Now, my son and my daughter-in-law, they go to work. They like punching time clocks, and they don't believe in the capitalistic system. All right, fine. You know, it is what it is. They're working for someone else to get a paycheck to pay taxes. Hey, more power to you. I don't try to tell my children what to do. I don't. They choose their own path. However, my grandson, it's like, oh, you want that? Well, let's do this. Oh, what if we did this? You could get this, and then you can get that. Okay, I can mold my grandson and see if he wants to take over this company. So he's 4. Okay, I got another 14 years before he's old enough to take over the empire that I'm building slowly. I'm in no great hurry. So yeah, I've been doing this for over 15 years. Okay, so I'm hoping in a few years, when his mother and father aren't so anal, they'll let me take my grandson, you know, and hang out with him for a week. You know, summer vacation, spring vacation, summer vacation, Christmas vacation. Let's go to Papa G's! Yeah! So this is what I told my kids. I said, when you guys have kids, I'm going to buy a house on the same damn street. Funny thing is, my son had a kid, right? And the house right across the street went up for sale. So I told my younger son, I said, Jacob, if you don't buy this house, I'm going to buy it. So my younger son bought the house across the street from my older son. So all 3 of my kids live on the same street, across from each other. I hope you are preparing for a global currency reset. Yes, I am preparing for a currency global reset. However, for us Americans to think we're any better than they are in Great Britain refused to change their currency to the euro. Why? Well, because they liked the pound, and they stuck with it. Now, we as Americans, we can decide, we want to get a currency. This is going to be a fun conversation. You ready? The currency reset, she's basically talking about a digital currency, which is great if you think about it. But then if you really think about it, it's not. Here's why. A couple of reasons why a digital currency is not a good thing. Because no matter what they say, they're going to take a little bit away from you. Okay, so if I take my debit card, my credit card, and I go to the gas station and buy some gas, and I get $50 worth of gas, I get $50 worth of gas. I got my $50 worth. The gas station owner does not get $50. He gets $49.75 or $49.50 because he has to pay a fee for the use of that debit card or credit card system. So now he takes his $49.75 and he goes buy his groceries. Okay, he's not getting $50 worth of groceries. The grocery store owner's not getting $50 worth of groceries. So you go down the line, business owner to business owner to business owner to business owner. Now, let's say hypothetically, you take a $50 bill. Okay, a $50 bill, and I go to the gas station, I get $50 worth of gas. Now that gas station owner takes that $50 bill and he goes to the grocery store to buy $50 worth of groceries. The grocery store owner takes that $50 bill and goes to pay the lawnmower guy for mowing his lawn. He takes that $50 bill, and the $50 bill never changes its face value. However, the digital currency from person to person to person to person gets less and less and less and less. Okay? Now, digital currency is great. Do I use it? Yeah, I do. It's simple and it's easy. It works for me. But it doesn't work for the person that I am buying something from because they're not getting the $50. They're getting the $50 minus whatever that convenience fee is. Now, some credit cards pay a 3% fee. 3%. So is he getting $50? No, he's getting 3% less. And then he's taking that 3% less of $50 and he's taking it somewhere else. And that person's getting 3% less. So on and so on and so on. So the little guy is getting screwed yet again. That's why I like cash. Denomination will always be the dollar base. Yeah, but if it's digital, it won't be. Okay, so as the buyer, as the purchaser, as the person using it, yeah, I'll get my $50 worth. But when I go to the gas station and buy $50 worth of gas, the gas station owner will not get $50. He will get 3% less than $50. PFE, is it time to buy 52-week low? Okay, I can't look at anything because it's still not up and running. Okay, look at PFE. PFE. Oh, look at that. PFE is up. Hold on. Yeah, we still have no numbers. Okay? No numbers. But PFE, yeah. Well, let's take a look at it. A year ago today, 41.70 was the high. Okay? She drops all the way down to 31 to the year bottom. The bottom of the year was the beginning of March, and that was 25.61. Okay, she goes back up and she pulls back down. We're sitting at 25.86. We're not at a 30-day bottom. Okay, we're higher than the 30-day bottom. Okay, beginning of March, 25.61, right over here. Okay, this is the bottom where we are now. We still have ways to go if you're looking for the bottom. Now, I don't like to buy anything until I at least see 2 days upside. Debit used to charge fees to the person too. Yep, I bought 45 shares PFA today. Awesome, Kelly, North Carolina. Where's your exit target? Now, Kelly, if you don't have an exit target, never buy something unless you have an exit target. Okay, you bought it, whatever you bought it at. Where do you plan on getting out? Okay, now, Pfizer does pay a dividend, so you will collect that dividend. But when do you get out of it? Now, they only pay a dividend once every 90 days. So let's say, hypothetically, you capture that dividend and you sell it for more than you paid for it. Okay, then you jump into another stock. Let's say Macy's. Okay, you collect that dividend. Okay, and then you sell a stock for more than you paid for it. Because remember, they pay every 90 days. How do you use stats to find good options? Ooh, six-pack, good question. It takes dollars to create even Dogecoin that's unlimited. So why does it have value? Why does what have value? The Dogecoin or the dollars? I don't understand the question. Why not? All right. How do I use stats to find good options? Oh, good question. I can't really tell you because at this moment in time, Thinkorswim doesn't have any numbers here. I can't tell you what the numbers are. Okay, so here's an idea, Kelly. Let's say, hypothetically, you bought Pfizer, because right now it's at 25.86. 25.86, you collect a dividend, and you sell it for 25.86, 25.87, whatever. So you get the dividend, which is the profit, and then you sell the stock for just what you paid for it, and then you move on to another company, like Clorox, Colgate-Palmolive, Procter & Gamble, Macy's, Walgreens, Ford, General Motors, and you collect their dividend. So you buy them for $50, you collect their dividend, and you sell it for $50. You're not out any money. Okay, you bought it for $50, you sell it for $50, but you collect the dividend. That's called dividend capturing. That strategy's been around for over 300-400 years. Have you bought pre-IPO investments? Nope, they don't pay dividends. If LABU bounces here, then PFL will be okay. Alrighty, if you say so. I have no idea what LABU is. All right, we still don't have numbers. This is no fun without the numbers, you know, because I can look at the charts and tell you what the charts look like, but that doesn't do any good without any numbers. Which dividend stock is good for selling covered calls? I got 150 of them. Okay, Gary, you ready for this? Write it down quick. Comcast, Cisco, AT&T, Verizon, TD, what is that? TD Ameritrade? No. TD Bank. General Dynamics, Warner Brothers, AbbVie, Abbott Labs, General Electric, Hormel, PNC Bank, UVV Corporation, American Express, Bristol Myers Squibb, Global Life, Cisco, JP Morgan, Procter & Gamble, UNM, Fuller, Clorox, Lowe's, Northwest National, Citibank. That's just this month. Okay? We got more in the previous month. Yep, no, there we go. Okay, KeyBank, NEM, CI, Halliburton, Lanconia, Heinz Ketchup, Kimberly-Clark, Occidental Petroleum, eBay, Siri, General Motors, Pepsi, Dover, Washington Mutual, Nucor, USB, NFG, MDLZ, Dole, Altria, Cincinnati Financial. They're all great companies. We still don't have any numbers. No, it collects the premium from selling the covered call. Dogecoin has no value, but it's worth 15 cents. Okay, maybe I'm too dumb, but Pink Sheet stock saves. Yeah. Why not? You've been here long enough to know I don't do any of that stuff. Only pre-qualified dividend stocks that have increased their dividends consecutively every single year. Okay, best dividend stocks for covered calls for 10 grand or less. Oh, you want another one? Here we go. All right, let's get rid of that one. And we just go right there. Oops, hold on a second. I'm still here. All righty. You ready? VFC, Ford, Key, T, WBA, KMI, M, CLF, PFE, GLW, HRL, FITB, INTC, BAC, KC, KHC, NEM, CMCSA, BP, HAL, VZ, BAX. Every single one of those companies is $40 or less. Doesn't the stock price go down the amount of the dividend? Yep, it does. That's why I buy before the dividend and get out before the dividend's paid. Grab my 1% before the dividend. Hello? When you sell the stock, does the taxes take away from the dividends? Circle Project. Well, that's a conversation you need to have with a tax strategist. Okay? I don't do tax. I did tax strategy once and I got flagged. I prefer not to get flagged again. But enter 2 weeks before the X date. Anticipation. What do you think of NVDY? Okay. No. NVIDIA. I don't do NVIDIA. NVDY. NVDY. Interesting. Number one, it's a monthly. I don't do monthlies. Okay? Monthlies do not pay me enough. What do you think about WBA cutting their dividend to 25% after a 52-week low? Well, Gary T., I like Walgreens. They've been in business for over 100 years. And their premiums are wonderful. Okay, sorry. Hey, don't be sorry. You asked my opinion. I don't do monthlies because they don't pay. Okay, they pay between 1% and 2% per month. Okay, that's great if you want 20 to 25% per year. Fine, do monthlies. Okay, less work. You only have to do it once or twice a month. Okay, you look at it once or twice a month. Okay, you meet it, you don't. Pays 35% annually. It's YieldMax. Okay. Pays 35% annually. Well, that always makes me wonder. Okay, what one did you say that was? TikTok. It's YieldMax. NVDY. NVDY. Okay, let's take a look at Yahoo Finance, and we'll take a look at the trade grid, not the trade grid. What do you call that? Okay, so here's the problem I have with, one of the problems I have. Okay. Okay, who said this one? All right. TikTok 12047. Okay, this is the problem I have. Other than the fact that it is a monthly, 35% annually. I'm going to disagree, but here you go. This is the dividend, historical performance on dividends. They've only started paying dividends in June of 2023. Where's the problem with that? The problem with that, that's only 2 years, okay? Not even 2 years. Not even 1 year, okay? They've been paying dividends for 1 year. Why would I invest my money in a company that's only paying dividends for 1 year? Let's look at some of them. 75 to 96. Oh, that's great. 81. Wait a minute, that's lower. 93. Oh, that's higher. 63, 68. That's lower. 42. That's lower. 51. Higher. 63. Higher. 153 higher, 162, 161. That's it. Not even 1 year of dividends. Why the hell would I buy that? Seriously. Your money, you do what you want. Okay? I only invest in dividend stocks that have increased their dividends for 20 years or more. Okay, 20% annually. Okay, no. Because they were paying out 75 cents in 03. Okay? December 03 was 50 cents. And if the stock is at 26 bucks now, okay, 50 cents divided by 26.63, that's 1.8%. Okay, 1.8%. That's for the month. That's not for a week. 1.8% for a month. And you multiply that by 12, and you get 22%. Awesome. There you go. Okay? Awesome. However, they haven't even done it for a year yet. You want to put your money in it? Fine. Me? No. But hey, that's just me. What do I know? I always tell people, do your own research. Figure it out. Yeah, we're still not online yet. Still not online yet. All right, there we go. Oh, how do you tell the difference between a monthly and a weekly? Oh, that's an awesome question. All right, right here, Alibaba. See this right here? 19 April 24. It's in gray. That's a monthly. See the yellow ones right here? Those are weeklies. Okay, 26 April, 3 May, 10 May, 17 May, 24 May. Yeah, every 7 days. That's a weekly. Okay, still not working. No fun if it ain't working. Okay, see NVDA. Oh, wait a minute. NVDY. See it right here? April, 19 April, 17 May, 16 August, 15 November. That's a monthly. The premiums aren't really that delightful. And yeah, they may be paying 35% annually now, but they've still only been in business for 1 year. That does not thrill me. Uh-oh, more questions. Hey, how are you doing over here? New people over here in Instagram. Thank you. All right, let's go look at some more questions. More questions. Okay, what are some of the stocks you'll be looking at on Monday? Oh, you'll find out Monday evening. I'm a nice guy, but I'm really not that nice. Okay, TikTok 120, I did take a look. Didn't thrill me at all. Walgreens Boots Alliance, okay. Closed to 52-week low. Yes, you're correct, it is. Okay, they're having issues with the... Okay, Walgreens is just one of the companies having issues with the, we're not going to prosecute people that rob us. Well, it's okay to rob $1,000 worth, but we're not going to prosecute. Yeah, they're having an issue with that. So a lot of the stores are closing because of the bleed. If you're bleeding, you got to cut the bleed, stop the bleed. So what they do, they close the store where they have a high crime area where there's no prosecution. You walk into a store, you steal $1,000 worth of stuff, and you walk right on out. They're not going to arrest you, and they're not going to prosecute you. So what did the store owners do? Said, yeah, we're not going to do that. Let's move online. Nobody's going to steal us online. NVIDIA. What about CC? All right, Larry, hold on. Kmart. Never heard of. Now, Larry, I really can't give you my honest opinion on the whole thing because, as you can see, we're not getting any numbers from Thinkorswim. Okay, now Charles Schwab, who bought out Thinkorswim, is changing over from TD Ameritrade to Charles Schwab. Now, I do have accounts in Charles Schwab, and I do have accounts in TD Ameritrade, so it's all a big old clusterfuck. You know, we're just not getting what we're looking for. But the chart. You know, a year ago, it was at 29, what was it? We opened up at 29.73. Here's a nice top back at the end of July at 39.05. The bottom, I don't know if you really call this a bottom because that's an anomaly. Look at that. Right? She gapped down and she kept on dropping. Okay, made a new bottom at 15.10. Big gap down. Why? What was the gap down for? I don't know. Now, she jumps up, continues to go up. Why? Because gaps have a tendency to fill. What happened? She gapped up. Yep, and it filled. Okay, now we're sitting at 3 days to the downside, 26.48. I can't tell you any of the numbers because they're not available at the moment. Okay? So I honestly couldn't give you my honest opinion there, Mr. Larry. What percentage of your portfolio do you invest in each position? 98% of each account is invested at all times. Why? Well, because I save 2% in case I have to buy something back, right? But if I have 5 positions, it's 20%, 20%, 20%, 20%, 20%. 4 positions is 25, 25, 25, 25. Okay, I like to keep my trades all even because I don't take, I don't have precedence one over the other. Okay, I'm just looking for the 1% per week. So if the stock's $100, I get 1%. Great. If the stock's $5, I get 1%. Great. 1% is 1%. 25% of my funds will go into this one. 25% of my funds will go into that one. And I'll look at that 1% and I'll grab it. And every once in a while, I have to dollar cost average down. What about BMO? I have some of that. What about CC? All right, look at CC. I can't give you any more information because it's not available. What do you think about Walmart? I can't give you any, guys, I really honestly can't give you anything. WMT, okay? Walmart's at $60, and I have no numbers, so I can't tell you what I think if I have no numbers. Hypothetically speaking, we'll be better off tomorrow night, hopefully. It's been proven to be fallacy about the thefts that are closing the stores to cut expenses for stock. Hellraiser, how are you today? You know what? I saw it on the headline news in the, what area was it? I think it was Roxbury, just south of Boston. One of the stores kept robbed over and over again. So that was the reason why they're closing the Walgreens in Roxbury. Roxbury is not the nicest place in the world. You could call it the ghetto, but I don't want to insult some of the people there. But that's what they say. Is it true? I don't know. Okay, Macy's did the same thing. Macy's closed a bunch of stores. Why? Well, let's put it this way. Let's say you have 150 stores, okay, and you want to, best serve your customer. Now, you look at the profit margins of all 150 stores. Whichever one's not profitable, all right, this one's a perfect example. All right, I got rid of my Apple stock yesterday, okay, because it only gave me a 4%. Got a question. What does it mean if a monthly and weekly, what does it mean with monthly and weekly? What happens during those periods? Okay, I'm not 100% sure what you mean by that. Okay, now, typo. Okay, well, fix the typo and I'll answer that question. So back over here. Now, I got rid of Apple because it was only paying 4% per week. All right, most people say, what the hell did you do that for? 4% a week is great. Not really. Not for that trading strategy. Not in that account. That account is between 7 to 15% per week. Okay, great. Why would I hold on to a 4% per week if I could get rid of that one and pick up one that's paying 10% or 15% per week? Okay, so if you have 150 companies, right, or 150 stores, and then the ones at the bottom of the list are losing money, so what you do, any business owner was, all right, let's get rid of those stores and put the money back into the stores that are doing well. It's just business. Okay, so if you live in a neighborhood where that store gets cut, terribly sorry, but business is business. It's not charity, it's business. They're in business to make money. Okay, people go to work to earn a living, to make money so that they can spend it. If the company's losing money in a certain store and they have 100, 150, 200 stores, however many they have, and 1 or 2 of the stores aren't doing good, of course they're going to cut it out. All right. Prices. All right. Could be. What all do you get when you subscribe? Well, that's an interesting question. They are staged events. They found out they were being told to the press to cover the down sales. Interesting. It wouldn't be the first time a company tried to manipulate the public. Hakan Lundasis. I don't know if I pronounced that right, but I don't know what the question was. Hey, Austin, late as usual. Nothing wrong with that. Commercial real estate is in big trouble. Yes, it is. You know what my philosophy is? It's like if I was in business at that time and I had the ability to borrow that money at 2%, 1%, hell yeah, I'd borrow as much as I possibly could. Hey, Reggie Jackson's here. All right. Yes, it is business. Too close to these are lies. That's the reason. Yeah, more than likely. Okay, anything comes across. I really, I hate to say that I'm cynical, but in some situations I am. Okay, when it comes to business and why they do what they do, yeah, I don't trust them as far as I can throw them. Okay, because the CEOs and the higher ups, their only main concern is their positions and how do they look to the stockholders so that they can keep their positions. Okay, why a CEO has to earn 10 times the amount as a regular worker is beyond me. I totally think it's unfair. I think they should be profit sharing in all the employees. But that's just my opinion. What do I know? How often is the Dividend King list changed? Once a year. They update the list, the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. I think there's another one. Once a year, they update the list. Okay, if you now Walgreens, no, sorry, 3M. I heard, I haven't confirmed it yet. I heard that 3M might be cutting their dividends. 64 years. Do you see that? 64. That's 6 decades. 6 decades. 64 years they've increased their dividends. And I heard a rumor that they might be cutting their dividend. Now, 3M's been in business for over 100 years. They've increased for over 64 years consecutively, every single year, higher and higher and higher dividends. What's going to happen if they decrease it? They're going to get kicked off the Dividend Kings list, the Dividend Aristocrats list, the Dividend Champions list, because they're on all three. And they got to start all over from the beginning again, from year one. Reggie Bo Jackson, where was he? I just saw that. You can get the option chain on Yahoo Finance. Yeah, I can, but it looks totally different. When you say monthly and weekly, does that mean relating to the dividends or something else? That means options. Okay? This here that we're looking at, Walmart WMT, offers weekly options. That means I can buy the stock and I can sell on Monday, someone to buy it from me between Monday and Friday and collect an option on a weekly basis. And I look for a safe 1% per week on the option. Now, some companies only offer monthly options, which means I can only do it 12 times a year. Okay, if I can get 2% 12 times a year, that's 24% a year. Okay, great. That's for a monthly. Weeklies can get anywhere between 1 to 3% per week. 52 weeks in a year. That's why I only do weeklies. And with the weeklies, I have over 150 stocks that I can choose from. So it's never a lack of choice. Okay, I just don't do monthlies because it just doesn't pay. It's not worth my while. But that's me. If you have a company that you like and they do monthlies, fine. What's the best way to get started in trading? All right, music people are fun people. Interesting. Okay, it's a good question. Basically, you're new here. Now, I've been doing this every night since the beginning of January. Okay, so every night between 9 p.m. Eastern Standard Time to 11:30. So we have another half hour. Okay, that's 2.5 hours every single night. Come back, learn what I'm doing. Because right now we don't have the numbers, so I really can't show you. But we're looking for a safe, secure, predictable, consistent 1% per week. This trading strategy that I am teaching here was created for my 9-year-old daughter. It had to be simple. It had to be safe. It had to be predictable, it had to be consistent, and there was no way she could lose. That's the 5 criteria I needed to meet in order when I created this trading strategy. Simple and safe was the two main ones. Simple and safe. Okay, so if you're just getting started out, I can explain it in less than 2 or 3 minutes. You get a good dividend stock, buy it before the EX date, sell somebody the rights to buy it from you for basically the same price you paid for it. So if I buy Walmart at 60 bucks, I want to sell the rights for someone else to buy it from me at 60 bucks. I want to collect at least 1%. That's 60 cents per share. That's 1%. And then I want to do it over and over and over again. Okay, I have 150 stocks I look at that meet my personal criteria. Okay, there's 9,498. We just looked a couple minutes ago. 9,498 companies on the stock market. How do you choose? Well, I shrunk it down to 150. That's all I look at. I don't look at certain companies, no matter how good they are. Okay, no matter how well they treat their employees, no matter how much their stock has grown, I don't look at them because it doesn't fit my criteria. 20 years of increased dividends, weekly options. Those are the two main ones right there. Okay, Dividend Kings, 50 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. Those are the only ones I look at because to me, that's the only place I feel safe and secure with my money. Okay, now I share this information for free. I have 2 different accounts that I share with you guys. Now I have more than that and I do different strategies, but this is the only one I share for free because I'm a nice guy, but I'm really not that nice. Okay, now what I'm telling you is for entertainment only. I do suggest you do your own research. We're all adults here. We're all responsible for our own actions. Don't listen to a word I say. Do your own research. Do you like Walmart? Is it going? Look where it is. Okay, you have a low here. Look where it is now. I wouldn't buy Walmart now. There's too much of a chance of profit taking. Look at all that. Okay, back in December, it's down around 50 bucks. Now, it's up over 60 bucks. There's too much opportunity for profit taking. So I say no to Walmart. And then I go to the next one. And I'll look at the 1-year chart. I'll look at the 90-day chart. I'll look at the 30-day chart. And then I'll look at the seasonality chart. Because I want to see what the trend is. What's the trend? Well, are people buying or are people selling? Because it's you and me, the buyers and sellers, who figure out, who dictate if a stock is too high or too low. Okay, and that information comes from the news or crap that's happened. What does it have to do with Walmart? Absolutely nothing. Does Jane, the cashier, go to Walmart regardless if the stock's at 50 bucks or 60 bucks? She don't care. She wants to go to work and get paid. She doesn't care what the stock is at. Okay, neither did the stock boys who's stocking the shelves. Oh, I can't go to work today. The stock's only at 40 bucks. That's not the conversation they have. If I don't go to work, I don't get paid. But the stock's only at 60 bucks. It doesn't matter. Okay? The stock prices is just the public's perception of the value. It's got nothing to do with the company itself. Okay? Walmart is consistently bringing in new companies. Can you please repeat your 5 criteria? Oh, 5 criteria. Uh-oh. Simple, safe, predictable, consistent, no way to lose. That's the 5 criteria. Okay? For that, never buy something you don't want to hold long term. Number 1. Number 2, never sell at a loss. Number 3, must have 20 years of increased dividends. Absolute worst case scenario, if the stock goes down, I get higher and higher dividends every year. That's why I want the 20 years of increased dividends. 4, got to have weekly options because I want to have weekly cash flow. I can't do that if it doesn't have options. And I can't do that if it has monthly options. That's why I want weekly options. 5, the numbers got to work. I can't tell you about that because, as you can see, Thinkorswim is rebooting. They're doing some kind of changing, maintenance, whatever it is, and I can't show you the numbers. But yeah, that's 5 criteria and the 5 rules. Okay, what's the best to get started? Okay, as I was saying, music people are fun people. Come back again tomorrow. Come back the next day. Come back the next day. Keep learning. Never stop learning. Never stop asking questions. One thing I try to tell my children, if somebody gives you an answer you don't like, fine. Go ask someone else. You don't like that answer? Go ask someone else. Keep asking until you get the information that you want to go. The shoplifting claims are manipulations. Yep, probably are. How much should I start with, and do you have a company you'd recommend? Unfortunately, I don't recommend anything. I just show you what I do. Now, you see this list right here? Okay. Every night while I'm on, you people here in the audience give me stocks to look at. Okay. I look at them. I give you my opinion. That's it. My opinion. And then I tell you what I would do. I don't ever tell anyone what they should do. Never. I always say, if what's working for you is working for you, then continue doing it. Okay. All right. Gary T. What do you use to research EX dividend date, two-time entry and exit capture? Ah, well, that's an easy one. It's called an EX dividend calendar. That's it. So simple. Now, Thinkorswim, which is by Charles Schwab, okay, originally Tom Sosnoff did it. Now, Tom Sosnoff has the Tasty Trade. Awesome stuff. Really. Once you get past a certain level and you want to upgrade, Tom Sosnoff does some really cool shit over at Tasty Trade. Okay? Now, he created Thinkorswim because he's a trader and he created it because he wanted to get more money. So he sold out to TD Ameritrade years ago. Ungodly amount of money. TD Ameritrade was recently bought by Charles Schwab. Now, everything is going from Charles Schwab, from TD Ameritrade over to Charles Schwab. That's what we're doing at this weekend because I have accounts at Charles Schwab and they have accounts at TD Ameritrade. So I have to log in to both to use the exact same trading platform. So within the next couple of weeks, this should be all over. So yeah, Gary, EX dividend calendar. You can go around to Google, say EX dividend calendar, and there's a bunch of places online where you can get them. Wade, I'm missing some of these questions. 10 weeks. So Wade, 10 weeks doing this, I'm up 10%. I've had a couple of losses. Oh, Wade, if you got 10% over the last 10 weeks, because Wade's been in the group. Okay, now you doing over 1%, you're up. You've been doing for 10 weeks, and you're up over 10%. Okay, good. Well, because you don't want to hold. All right, whatever. I have no idea what that means. Hellraiser, exactly. Never take a loss. Be willing to hold. That's why you only buy quality stocks. Well, thanks for that, Hellraiser. I'm kind of curious, Hellraiser. Did you get out of that position that you and I talked about? I'm kind of curious. MDGL. Okay. Oh. I'll go with the 50% per year choice. Yep, me too. How many times do you want the company to pay out dividends per year? That's an interesting question because you have companies that pay out once per year. Some pay out twice per year. Some pay out 4 times per year. Some even pay every single month. Now, it's all about the numbers. Okay? The calendar will tell me when the dividend is. Okay? When the dividend is, I want to buy it 2 weeks before the dividend because stocks have a tendency to move up before the dividend date. I want to get in. I want to get out before the dividend's paid. Reason being, stocks have a tendency to go down after the dividend's paid, and I want no part of that. He was a smart coder. Yes, he was a very smart coder. What times does the group meet? Well, Sage, the group meets just before the market opens, and that has no control for me whatsoever. Okay, we jump on at 9:15. I do a podcast. Now, remember I told you I have a podcast I've been doing for the past 4 years. If you want to read up on some of the trades I've done the last 4 years, right here, the little dots, okay? Click on the one that says podcast, dividend, stock talk, whatever you listen to your podcast. Okay? Over 800 of these every single day, every single trading day. Okay? Every single one. Back to where we were. Oops, not that one. Okay. So yeah, the group goes live at 9:15 and goes right to around 10:15. When you trade, how many monitors do I use? I use one. That's it. Okay. I'm in and out in less than 15 to 20 minutes. Now, if I wasn't doing the podcast, I'd be out quicker. Okay. But as I'm doing it, as I'm explaining it, it takes a little bit of time. Do you mean as many times as possible then? No, I do not mean that at all. What I mean is it's all about the numbers. You take a look at what the dividend is, okay? You take a look at what the premium is. You take a look at where the stock is moving, the movement, okay? Here's the high, here's the low, here was it a year ago, and here's where it is now. Okay, I want to look at the 1 year chart. Let's take a look at this for a second. Okay, I want to take a look at the 1 year chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? Now, is there a pattern? Yes, there is. It goes up, pulls back, up, pull 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 back, up. Okay, so wait for a pullback. Okay, that's the 1 year chart. Then I want to zoom in and take a look at the 90-day chart. Okay, high, low, where was it? Where is it? Okay, where's the pattern? Up, sideways, up, profit taking, up, profiting, up, profiting, up, profiting, up. Okay, now I want to look at the 30-day chart. What's it done the last 30 days? I'm looking for a pattern to see if I should jump in. Now, 30 days ago, here's where we were. She goes up, profit taking, up, high of the 30-day period, profit taking all the way down to the low of the 30-day period. Now we're going to the upside. Okay, look where we are as compared to where the 30-day high is. Okay, we're in an up pattern right now. So yeah, that's a good opportunity to jump in at the moment. However, look at the last 120 days, the last 4 months. Way down here, all the way up here. Look at all this potential profit taking. Okay, it's potential profit taking. It's going to happen or it's not. Writing every day down. Do you use candle patterns like the double bottom? Not necessarily so. I'll point them out when they pop up. Like right here, it's close to a double top. Okay, that's close to a double top. Not perfect double top, but close. You got 61.57 and 61.66. Okay, so it's not hitting 67. That's the top at this moment in time for this time frame. Just for the time frame. Is it high for the year? Is it high as it's ever been? No, it's just for this time frame. Now, this time frame, we want to get an idea where it's going next. Now, why do I do weeklies? Well, because it's easy, in my humble opinion, it's easy to figure out where is it going to go for the next 5 days. That's why I do weeklies. 20 years of increased dividends. Do we really care about 120 days? Not 100% really, but you kind of see things from my point of view. I hear you, but I mean everything else equal. It's all about the numbers, really. If I'm buying it at a certain price and they increase their dividends consistently, okay? If I'm buying it and I'm selling the option against it, what is my rate of return for the week? Okay, now is the stock going in the position that I want it to go? Is it trending in the correct direction? Okay, you don't want to fight the trend. I do not want to jump into a stock that's going down. I want it to get to its bottom, turn around, go back up. Do you ever also buy out of the money puts cheap? Nope, I don't, Secretariat. Hello, would you like the opportunity to join a professional TikTok live agency? I already belong to one of those. Fallout show released 2 days ago, and Iran finally starts firing at Israel. Can't be a coincidence. Do you lose money? Every once in a while I do, Ed. So I'm going to tell you something. Anyone ever tell you they don't lose money? Unless your name's Pelosi. Okay, everyone loses. Okay, if you think you can dance to the fiddler and not dance to the music and not pay the fiddler, sad mistake. Okay, yeah, I do lose. I lost last year on 3 companies. Okay, the 3 were those: PPG, Kimberly-Clark, and Target. Pelosi, yeah. So the amount of times doesn't matter, you mean? No, it doesn't matter. The amount of time, the dividend quantity, how many times it pays a dividend, irrelevant. Okay, once a year, 4 times a year, twice a year, every month, doesn't really matter. The numbers, it's always, always, always about the numbers. Am I making my 1% with this particular trade, or am I not? That's it. The dividends are only there as a fallback, just in case the stock goes down. Am I going to collect a dividend? Is that dividend going to be higher? I want to be higher dividends. All right. Really? I have to show some losses. I don't like paying taxes. I thought it had to pay weekly. No, 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 no. Weekly is the options. Weekly options. Okay? Most of the stocks I look at have quarterly dividends. Okay? January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Most of the companies I look at pay 4 times a year. Now, the ones that pay once a month or once a year, I'll take a look at them before the EX date. That's it. Oh, yeah, there you go. Hey, Mr. Approval joined and left. That was quick. All right, we're down to our last 15 minutes. Do you use Fidelity? No, I use Thinkorswim, which is having issues tonight, and last night and tonight we're having issues. I really do hope they get figured out by tomorrow night, because I'd like to know what I'm doing on Monday. All right? I don't use Fidelity. Okay, I've used a lot of different trading platforms. Okay, I started out when it was back in the 90s. I started my trading. Do you give money away for losses? Every once in a while, I'll take a loss. I will. It happens. Okay, no one's perfect. I make stupid mistakes. You can even check out my videos. There was one that said, "Oops, I made a mistake," and I actually come out and say it, because sometimes I do. I did use Scottrade a long time ago. I think I used Scottrade when they went from $7.50 a trade down to $6 a trade. Heavy question about stock market. I kind of need some help. All right, unknown. What's the question? Webull. I haven't used that one. I like Robinhood. You don't lose until you sell. Exactly right. That's why rule number 2, never sell at a loss. Okay, but once the stock goes down, okay, this issue I had with Target last year. Okay, now I don't hide this. I tell people, let's look at Target, PGT. All right, now you don't lose until you sell. All right, you ready for this one? You guys are gonna love this, because you're gonna say, "I told you so." You lose, blah blah blah, whatever. Okay. You have to be willing to hold. That's why they have to be quality stocks. Yes, Hellraiser. Yes. All right. Anyway, Target back in July, 135 right here. Look at this, 135 down to 102. I bought it at 135 in July. Okay. Now listen closely. Bought at 135. I sold the 135s. I got like 2.5%. Nice. A week later, we're at 132. I was still selling the 135s. If you fear a black swan, like the coming war, do you stay out of the market? No, I don't. Okay, because if you think, remember the Vietnam War? People were still going to work. Afghanistan, Iraq, Iran, people were still going to work. Okay. World War I, World War II, Korea, Vietnam, people were still going to work. Okay? People need the toothpaste, need the toilet paper, need the paper towels, need the dish soap, needs the shampoo. Okay? Okay, then you have the people that are retired and live off their income. They don't care what's happening in the world. They go shopping. They do this, they do that. Okay, even during the pandemic, there's still people out there going to work, doing I want to see if you can beat Prop Firm. I have no idea who Prop Firm is. Remember the Vietnam? Only me and you are old enough for that. Thanks, Mikey. I feel better about my position. I like GES, reversed head and shoulders on a weekly. All right, why naughty? You're getting a little confused of the simplicity of the trading strategy. It was creating for a 9-year-old. If I tried to tell my 9-year-old daughter, oh, look at this. This is a Head and Shoulders. She's looking at me like, where's the shampoo again? Let's get back to this. All right, so as I'm saying, watch the chart in the back. Week 2, we were down to 132. I was still selling the 135, still getting over 1%. Week 3, we're down to 126. 126. I cannot sell the 135s anymore, so I'm selling the 132s. There's your risk. Okay, I'm selling the 132s to catch my 1%. Okay, it's 4 strikes out of the money. That means she has to jump quite a bit in order for me to lose. So I did that all the way down. Okay, 6 weeks later, we're down to 119. I'm still at 135. So at 119, I'm selling the 122s. 4 strikes, 5 strikes out. Still good. Remember that cow analogy I gave you? Okay, up here, the 135, I'm getting a gallon of milk. Now I'm only getting a half a gallon of milk. Here, I'm getting a quart. Here, I'm getting a pint. Do I get rid of my cow? No. Here's where it bit me in the butt. Yeah, big bet, you're absolutely right. But I've been doing this long enough to know 4 or 5 strikes out of the money wasn't that bad. But it increases the risk for the market crash. Exactly. How can you say it doesn't matter? Well, because it doesn't matter for me. All right? Because I've been doing it long enough and I look at it every day. I personally understand the risks and rewards. Okay, I've been doing this for close to 20 years. Okay, so I understand that I am going to pay the fiddler at some point in time. And I'm about to show you where I paid the fiddler. You're going to say, what? And panic. All right. Is it better to invest in VO or SHD if you're in your 20s? Joshua, I honestly can't tell you that because I have no idea what your goals are. I mean, do you want to continue working until you're 60 or 70? Fine. You want to quit working when you're in your 30s? Different story. Nike is down right now. Okay, I can't give you any numbers because it's not open. Oh, damn it. All right. Let me finish my example. All right. So here we are in October, the beginning of October. We were down all the way to 102. I was selling the 110s. Okay, getting a little tiny bit of a premium. I was collecting something because something is better than nothing. How long does your morning meetings last? The morning meetings last until everyone runs out of money and runs out of questions. Okay, we did one morning meeting. It was like 35 minutes. Everyone was out of money. We looked at all our positions and nobody had any questions. Okay, we had one morning meeting that went to 2 hours. Okay, I'm retired. I don't have time schedule. I can stay on as long as I want. Okay, my firm belief is that I'm here to help those who want to be helped. You want to be helped? Sign up and I'll help you. But I can't tell you what to do. I can give you my opinion. That's all I can do. Target's been nice twice, S&P for the year. Yep, you need to forget this one and never look back. All right, Mikey, I'm just showing the example where I got my ass handed to me. Okay, so beginning of October, okay, just went sideways for the whole month of October and November. Now, on the 14th of November, we're sitting at 110. Okay, I sold the 114s. Okay, 4 or 5 strikes out of the money. I'm finishing. Okay, on the 14th, I sold the option for 50 cents. Then, very next day, the Black Swan event. Now, if you think you're not going to encounter a Black Swan event at one of your positions at some point, you're sadly mistaken. I sold my position for 50 cents. I was getting that quarter milk. Okay, small amount, premium, every week, small premium. Now, very next day, she gaps up $16. Okay, I sold it for 50 cents. I now have to buy it back for $12. I had to dish out $12,000 for that Black Swan right there. Why did I do that? Well, if I didn't, remember, I bought it up here at 135. If I didn't buy it back for 12 grand, I would have lost 25 grand. I danced to the music. I had to pay the fiddler. Yep, it happens. How do you make it work if you're not retired? What do you mean? I am retired. Oh, how do you make it work? Take a coffee break. Okay, so that being said, at this point in time, I had 6 positions. Granted, Target was the only one that was down, kicking my ass. However, I did end up selling it in December and broke even. Every single premium I made, every single dividend I collected, gave it back to the market. It happens. Okay? 3 times last year. 3. 49 weeks, okay. 3, not so okay. What's the difference between dividend stocks and trading penny stocks? Dividend stocks pay you a dividend. They share in the profits. Penny stocks do not. If you can do penny stocks, do some research. You can get into penny stocks easy. Try getting out of them. I did a few penny stocks years ago. I looked at it. It looks great. And then you look at the pump and dump. If you don't know what the pump and dump is, don't get involved in penny stocks. Okay? It is addictive. I have no idea. I took a look at it, and if you don't know what the pump and dump is, do a bit of research. Look up pump and dump on dividend stocks. On penny stocks. Would butterfly spreads be easier? Again, why not? You ask these questions consistently, and I keep telling you the exact same answer. It was created for a 9-year-old little girl. It had to be simple. Butterflies are not simple. Strangles, iron condors, diagonals, double diagonals, corner spreads, not simple. Okay, buy a stock, sell someone the right to buy it from you for profit. That's easy. Our dividends better than long-term wealth. Always depends on what your plan is, what your strategy is. How did you do last week? Last week, hold that thought. Last week, okay, account number 1, 1.2%. Account number 2, 4.4%. Okay, right there, week number 2, week number 15. Paramount, Macy's, JD, and Albemarle. Account over here. Oh, I didn't do that one. Damn it, I can't read it. I can't read that one. Anyway, I'll have to fix that one. But yeah, I average 1% per week. All right. Yeah, so it happens. Okay? Every once in a while, you'll get a black swan event. Now, I still bought Target this year. Okay, what are the best dividends to invest in right now? Omar, I can't answer that question for you. I can't. Okay, right now, I can tell you what my favorite is so far this year. Whoops. Macy's. Macy's, General Motors, Mosaic, Kohl's, Albemarle. That's for this account. This account here, Walgreens, Macy's, Kohl's, General Motors, Comcast. Still waiting for the numbers. Oh, it's 11:30. Hey, Ryan just signed up. Thanks, Ryan. All right, what was your net worth last year? Wouldn't you like to know? Omar oil stocks are up, and some chip stocks and tech stocks too. What are the return rates on that? I have been picking up Walgreens. Okay, again, I look for a simple, safe, predictable, consistent 1% per week. I have 150 stocks I look for. This trading strategy was created for a 9-year-old little girl. Had to be simple, had to be safe, predictable, consistent, no way she can lose. How was that? Never buy something you don't want to own long term. Never sell at a loss. 20 years or more of increased dividends, weekly options, and all the numbers got to work. No, net, not net worth. I have no idea what you mean by net. I got 5 different accounts to keep track of. I really don't keep track of it that well. I'm a lazy investor. Really, I am. I buy something, it works fine, and I just say, hey, it works. Great. Okay, we went out today. Me and Doc went over that tonight. We want to figure out how a certain strategy was working. We're going over this. I was like, oh man, this is so difficult. I just look at what do I have invested this week? What do I start out on Monday with? What do I end up on Friday with? Am I positive or am I negative? I'm in the positive. Great. Why do I need to know everything? But that's just me. Sweet. Oh my. No penny stocks, dude. That's a hard pass. Exactly. I don't do penny stocks. All right. You said you had to pay the fiddler. What do you mean? Why did you have to pay? Doesn't only your stocks lose in value? I don't understand what you have to pay. Oh, okay. So, as I was pointing out, he wants to know why I had to pay. What am I looking at? Where is... Here it is right here. Okay. I owned Target. Okay. I bought Target stock at 135. Okay. Now, normally, I collect 1%. I get out 1 week or so. Normally. Every once in a while, a stock will go down and then keep on going down and keep on going down. That's exactly what Target did. So I had two choices. Do I continue selling options on it to create some type of cash flow, which I did, or do I just collect the dividends? I could have done that. But I went for the selling the premiums and collecting a little bit of cash flow. Then it jumped up $16 overnight. So to avoid losing $25,000, okay, because I bought it at 135, 1,000 shares at 135, and selling it at 115, I would lose $25,000. 110, I meant, sorry, 110. Okay, that, or I had to buy back this position from here, which cost me $12,000. So, do I spend the $12,000 to buy that position, or do I let that position go and lose $25,000? So it was just a matter. I was going to lose no matter which way I was looking at it. Was I going to lose $12,000 or was I going to lose $25,000? That was the question. Now, I had 5 other positions because when I had this position, I had 6 positions. Okay, the other 5 were doing just fine. This one, right here, on this particular day, jumped $16. Omar Hellraiser. From one company, I thought dividend or multiple companies in one stock. No, that's multiple companies in one stock is an ETF. It was a TD, but Charles Schwab bought TD. Now it's with them. That's correct. All right, so we're past 11:30. I'm done with my 2.5 hours. I hope you guys learned something tonight. Hopefully tomorrow night they'll have this mess fixed out, and then we'll be able to see some real numbers. Because Monday we're going to jump into a bunch of stuff, but Monday I'm not actually buying anything because everything I own, I still own. All right? I didn't sell a single thing this week, but I did make over 1%, which is all I'm looking for. So I will figure out on Monday if I make another 1%. We'll find out. Don't know. Okay? Now, I don't do it 1% every single week. Okay? If you take a look at my historical performance, okay, week 15, 1.2, 1.5, 1.2, 0.9, 3.9, 4.63. That was a good week. Week number 10, 4.63. Woo. Okay, now I don't do 1% every week, but close. Okay, you said you had to buy back. Do you mean you did not own the stock? I don't get it. All right, Hukan Lundis. Okay, now when I say I buy a stock, okay, I buy a stock means I own the stock. I owned Target, TGT. I owned Target at $135 per share. That's what I owned it at. Okay? Now, every single week, I sell an option against my shares. Okay? When I first bought it at $135, okay, at $135, I sold somebody the option to buy it from me at 135, what I paid for it, and I got 2%. Okay, nice. Okay, week number 2, I got 1.75%. Okay, week number 3, 1%. Week number 4, 1%. Week number 5, less than 1%. Then I had to start dropping the strike price that I sold. So here, right here, November 14th, when the stock was at 110, I sold someone, actually I sold it at 108. I sold somebody the right to buy it from me at 110. And then she jumped up overnight $16. So I had to buy back the option that I sold, not the stock, because I still own the stock at 135. The value of the stock went down, and the 135 option was worthless. So I sold, I believe it was the 110s or the 112s. I've been here every day. I understand all the strategies in the world except this man's strategy. Something with his teaching not getting through to my brain. All right, Jim, they want to know what you're selling, that it's only the option because the price dropped. Yeah, okay, it was just the option. Okay, the option I sold against my stock. Now, the stock I still own at 135. I sold somebody the right to buy it from me at 110, which means I would lose 12,000 bucks unless I paid that person 12,000 bucks to go away. So he took 12,000 bucks, he went away. I kept my stock and I kept the uncovered call. Jim, let me see if I can explain it to you. Okay, Jim, are you ready? Let's say, hypothetically speaking, Jim, you have a car sitting on the side of your yard, 1984 Camaro. You want 1,000 bucks for it. Cool, great. You think it's worth 1,000 bucks. You want $1,000 for it. All right. So Tom down the street says, "Hey, Jim, I will buy your car from you. Here's $100. Hold it for me until Friday." And you say, "Okay, come on Friday, give me 1,000 bucks, you take the car." That $100 goes in your pocket. That is premium. That is a covered call. You own the car, okay? You own it. Tom wants to buy it for 1,000 bucks. He gave you option consideration, 100 bucks. He's either going to come back on Friday, buy the car from you, or he's not. If he thinks by Friday it's not worth 1,000 bucks, he says, "Nah, I don't think so. You keep it." You keep the 100 bucks. And then Monday, when the market opens again, you can sell it to someone else for the 1,000 bucks. It's not refundable. That's exactly right. It's a non-refundable deposit. Same thing with the stock. If I buy Target, okay? If I buy Target, at this moment in time, it's 166.44, okay? I could sell somebody the right to buy it from me at 167, which is more than I paid for it. That is called a covered call, but I have to buy the stock first. I have to own the stock. So you preferred that instead of losing the stock. Exactly. Exactly right. Okay, so Jim, if I buy the stock first, I own the stock. Wherever I buy the stock at, whether you buy it at 130, 160, 180, 190, 100, whatever you buy it for is what you buy it for. That number never changes. Now, if I go Monday morning and buy it for 166.44, I want to collect a 1% premium. I can't tell you what that is now because there's no numbers here. Okay, but 1% of 164 is $1.60, or $1.65, something like that. I want to make sure the premium, the down payment, or the non-refundable deposit is going to be 1% or more. Okay, if by Friday the stock goes over the strike price I sold, then that person will buy the stock from me, and then Monday I will be back into all cash. If by chance on Friday at 4 o'clock the stock is less than the covered call that I sold, the strike price is less than that, I still keep that premium, that non-refundable deposit, and I own the stock Monday, and I get to do it all over again. Okay? Now, This was created for a 9-year-old little girl. I like to think that you know that. Thanks for taking the time to explain. Appreciate that. No problem. That's what I'm here for. Now, Jim, I hope you got that. Okay, you're buying an asset, a stock, a portion of a company. Target, Ford, General Motors, IBM, whatever one you pick. Okay, just pick one. Buy it. Buy it for $100. Sell somebody the rights to buy it from you at $100. They're going to give you a non-refundable deposit that guarantees that they will buy it from you by Friday afternoon. Okay, if it's above $100, they'll buy it. If it's not above $100, they don't buy it. But you still get to keep that non-refundable deposit. Selling calls, if it goes down, you're good. Either way, I prefer to go up and be called out and be back into cash. Do you need 100 shares or can you buy less? Well, you need 100. 100 shares equals 1 contract. 200 shares, 2 contracts. 300 shares, 3 contracts, so on and so forth. Strategy works. Just need to have some money available to own the stocks you will be buying. Correct. You got a smart 9-year-old. Oh, no, I don't. I love her dearly. I do. It was simple. Okay, you go to the calendar. Okay, if today is the 13th. Okay, if today is the 13th, I want to buy stocks 2 weeks ahead of time. Okay, I want to buy stocks that are paying out on the week of the 28th. Okay, ASO, Fifth Third Bank, Mandalese, something natural gas, USB, Nucor, Washington State. They are buying the rights to buy it at a cheaper price. What you want the stock to go up to get out? Yeah, that's about right. You're recording the session. I want to re-listen to your explanation. I think it is being recorded on YouTube. I made a fortune selling covered calls on Coin the last year or so. All right, Mr. Kardashian. Communist? Really? You think I'm a communist? I don't know if that's a compliment or not, but thanks. I wanted to get into real estate, but it's more complicated, riskier, and appreciates slower. So, meh. All right, Joshua. All right, we're past 11:30. It's actually 11:45. I'm going to call it a night. You guys have a lovely day, and I'll see you again tomorrow night, 9 p.m. Eastern Standard Time. Hopefully we have, this thing up and running so we can look at some numbers. Finish over here on Facebook. You guys have a nice time over there on Facebook. Done. Ending live broadcast. Over here on Instagram. Catch you guys again tomorrow. Bye on Instagram. And now. All right. Post for 30 days. Here we go. YouTube. Catch you guys later on YouTube. Done. And good night. Bye. Hellraiser, chat with you later. Hey, Hellraiser, you never answered the question whether you got rid of that position that you were in. Okay. Done with TikTok. Catch you guys tomorrow. And now, there we go. 11,000. And end here. Stop streaming.